morning, everybody. You know I don't need encouragement. Some days I wake up feeling super artsy-fartsy, guys. Today's one of those days. Excited to be here today. Good morning, Miss Trina. Excited to be working with you guys today. Can't wait, guys. All sorts of good stuff coming. Good morning, Erla. Question mark. Good to see you back in here. Love it. Ron C. Sugar in the pancakes. Yeah, better dad. Good to see ya. Izzy got game. Always nice. I like it. Oh, man. You guys ready to learn how to work a little bit? I'm so stoked. Gonna be a good time. Gonna be a lot of fun. We're gonna do what we do every day, guys. Repetition. That's why I was putting the silly Bart Simpson things. Repetition. That's all we do. Repetition. Same thing every day. Learning patterns, learning rules, following rules, embracing advantages. I was talking to, who was I talking to? I was talking to my kid yesterday. And he's like, so, he goes, which of your classes do I need to attend? And I was like, they're all the same. Every one of them. It's the same thing every morning. And guys, there's a reason it's the same thing every morning, because the more you do something correctly, the easier it becomes to repeat. The more you look at something, the easier it becomes to recognize. And we're really just grabbing that one by the horns and running with it. So, hey, Jeffrey, good to see you. Bob B, nice to have you. So, guys, we're going to do what we do. Checking news, that's the first one. I was making pancakes. What did it look like? Did the market spike at all at 8:30? Did the market jump or bump or change directions or become too fast to trade? It did. Did anybody get caught? Did anybody take a trade just a couple seconds before that news release and get run the fudge over? Sometimes it happens, guys. There's a way to avoid it. If you come to forexfactory.com every morning, yeah, there might have been some sugar in the pancakes, Ron, and you look for high-impact news. Bob, it got you. You've got this giant red flag. It happens. Everybody gets got at least once. At least one time you get caught. And then when you start seeing high-impact news, you're like I don't know, you're scared. You're like an abused spouse. You flinch. You don't want to do it. You know you don't have to do it. There's always another trade coming. So anytime I see high impact, guys, I'm on my hands. I'm doing nothing. I'm making pancakes. It's Friday. And don't care what the news is. And that's it. Like putting your boat in the water without the plug. You do it once. Oh, man. We did that with a buddy's boat once. We saved it, but man, talk about panic scramble. All right. So everything that I talk about each and every day, over and over, guys, it comes from the Nexgen page. And I'm going to tell you, and I posted both of these in the room. I'm gonna say it again. 5 days a week, guys, and we're going to talk about 3 rules on only 2 charts. Recognizing advantages and turning them into the trades. That's what we're going to do. All of the rules that I talk about come from the website, specifically the trading guide. All the rules, all the indicators, everything that you need to know. Guys, I'm telling you, 100%. Everything you need to be successful with the software is going to be laid in your lap this morning. And we're going to start it. We're going to start your journey towards greatness with a high probability trade. There it is, right there in the frequently asked questions. I have to stand up. High probability trade, guys. Each indicator on every chart agrees with the rules for the trade. That should make you happy. Hey, good morning, Steve. Each indicator on every chart agrees with the rules for the trades. Guys, you are getting confirmation of advantages everywhere you look. This is a high probability trend trade. This is what we're going to talk about. Triggers are their strongest. No termination conditions exist. Nothing between you and your target. This is the trade that typically wins 70 to 80% of the time if you can follow the rules. This is a trade that, because of that win percentage, that success breeds confidence. And confidence makes it easier for you to hold out and wait for your rules to be met. And then most importantly, and I'm not sure that I've ever mentioned this, this is the trade that's going to teach you to read your charts. And that's exactly what you're going to do before you ever become a day trader. You're going to focus on becoming a chart reader. Because chart reading is 90% of your day. Chart reading is looking at your indicators and letting them tell you that it's time to look for a trade. Hey, good afternoon, Miss Jen. Chart reading is going to keep you sidelined while you're doing it. Chart reading is going to keep you out of trades. Chart reading is going to help you stay away from avoidable losses, guys. And once you get good at chart reading, you will believe that it's 90% of your day and that only 10% of your day is actively trading because your rules are met. But once you start to focus on the reads and the advantages rather than the money, guys, you're going to understand where the market is likely to continue. This is going to become an entry point for you. This is where you're going to say the trend is established, my advantages are in place, and this is precisely where the market is most likely to bounce and continue with that trend. You will understand where the market is likely to go. This is going to help you with picking your targets as you grow with the software. And you're going to understand where the market is likely to stop. And this is the one that I really want you to pay attention to. Likely to stop areas are what we call termination conditions. And termination conditions, no matter how strong a market is moving, no matter what your opinion is, a termination condition can stop that market and create a reversal. You're going to know exactly where they are before the market ever gets to them. So, the high probability trend trade is only 3 rules. I am not a smart man, Jenny, but I do know what advantages are. There's your Forrest Gump reference this morning. Each rule provides an advantage. Each rule, when true, gives you some of the good stuff, guys. So rule number 1, when true, strong triggers, you're going to have the advantage of momentum. Momentum means that the market is showing you that the odds are favorable for it to continue in the direction of the trend. Momentum can break key areas. Momentum can cover mistakes, guys. Momentum is rule number 1 for a reason, and you're going to see a lot of people in this room taking advantage of nothing but momentum. Rule number 2 says no termination conditions, none of those areas that could stop the market. No brick walls in your way. And when that rule is true, we're going to say that we have a clear path. So a trade is momentum plus a clear path. And then rule number 3 is going to define exactly where the market is most likely to continue. Most likely to continue. Not guaranteed to continue because, man, we're good, but the market has its own heartbeat. But we can pinpoint with amazing accuracy where the trend is most likely to continue through rule number 3. I would like you guys to focus on these first 2, momentum and path. Once you understand momentum and path, once you can identify a strong trigger, once you can recognize a termination condition, you literally have everything that you need for a very successful, very consistent, very profitable trading plan. Rule number 3 is specific to that high probability trend trade. Rule number 3 is nothing more than entry because you have advantages. 2 charts is all it takes. There are so many more charts available. You can build any chart you wanted. 2 charts is all it takes to recognize the high probability trend trade. Your large chart is on the left. It's a 13-2 in the crude oil, S&P, gold, whatever it is you're trading. Behind the first bar, this one bar, the first bar, will define the direction of the market, let you know which way you should be looking for your rules to be met. That first bar will show you the advantage of momentum through rule number 1. That first bar will let you know whether or not you've reached an area that's problematic, a termination condition, and it'll let you know if you have the clear path. Rules 1 and 2, 66% of your advantages come from one bar on the large chart. That's pretty simple. Your small chart is a refinement chart. Your small chart takes that one bar, from that very broad stroke of a brush, showing the overall opinion of the market. It takes that one bar that's difficult to see market change in. It's that one bar that's hard to stop, and it gives you an X-ray, and it shows you the inner workings of that one bar. It shows you all of the ups and downs of price, and we're going to use those fluctuations to pinpoint and define precisely where the market is most likely to continue. That's what rule number 3 does for you, is it takes the big picture and refines it. And it's that refinement process that allows you to reduce risk, and it's that refinement process that allows you to increase profit potential. And rule number 3 is specific to the small chart, and rule number 3 should only be put into play when the large chart says that it's time to go. For you brand new users, I'm going to blanket you with a lot of conservative rules that increase the likelihood of success. So understand that this first hour is designed to teach you the absolute best of the best way to take this high probability trend trade. We use 2 charts, big chart, little chart, because they're a reflection of who you're trading with or who you're trading against. The large chart is the big crowd. These are the men and women. They've got very deep pockets and an awful lot of influence. And they define trends. And when they wake up and they're like, wow, what a great day for the market to go up, the market goes up. And when all of them rally behind that up, they create an overwhelming amount of momentum that's difficult to stop. And then when they get to those key areas that you're going to see on your large chart, they are most likely to react at those areas, to make decisions, to enter, to exit, to fight one another. Large chart leads the way, and your path of least resistance means that you simply go with the flow. The small chart, there's the inner workings of that one bar, is kind of like a small crowd. And guys, this is a metaphor. This isn't a bunch of people in a parking lot making the market move. But the small crowd fights. The small crowd is that fight against the large crowd. It's that retracement. It's that little pushback. Rule number 3 is designed to show you where the small crowd is most likely to fail. Rule number 3 is designed to get you in where the market is most likely to bounce and continue with the large crowd. So think of it as the small crowd. Embrace the idea that these guys and gals fight, and accept it and love it and look forward to it, because it's their fight that's going to push you to your entry. And if they're losing 20 to 30% of the time, you have the potential to win. They're losing 70 to 80% of the time, forgive me. You have the potential to win 70 to 80% of the time. So my class is going to be the same as it was yesterday and the same as it'll be on Monday, guys. We're going to take an hour this morning and we're going to learn the Fibonacci rules and the trigger line rules for when it's okay to trade. That phrase, okay to trade, is there because as a brand new user, as someone learning to strive for consistency, give yourself 2 options when it comes to entering the market. If my rules are met, I will enter the market without hesitation. If my rules are not met, I will choose to sit on the sidelines, accept it as part of the 90%. It's the easiest way to do things because your rules will have been proven to win more than they lose. There's an advantage in the rules. The rules are a description of a pattern that has been proven, validated, verified by you to win more than it loses. You have the ability to simulate and to practice and to take pictures and to make mistakes. And if you follow the path, if you embrace the first step to becoming a confident trader ASAP, guys, it is post your trades in the room. Post your trades in the room. Show me what you're doing. Tell me why you're doing what you're doing. Show me what you see. And guys, we're going to use your pictures in the room for a couple different things. I'm going to use them first to read the words that you put on there, to see how you're reading your software. Are you identifying the advantages correctly? Are you reading the indicators correctly? If you are, we're going to high five. Man, way to go. You nailed it on momentum. You absolutely saw those termination conditions. But if there's a challenge, guys, we'll fix it. We'll go back to the lessons. We'll go back to some pictures. We'll talk about it. We'll go to the live market, and I'll clear up any misunderstandings that you had. So make sure that you tell me what you see and why you did it. And then when you take the time to write the whys, when you take the time to write, this is why I entered and this is what I saw. You're creating a recipe. You're creating a recipe to repeat the successful things. You're creating a recipe to avoid the unsuccessful things. And that's why annotation becomes so important, because you're making things repeatable. Wayne, let me know if that picture helps. And then Jerry, I do teach the same thing every day. It's been true for you that you find a new way to say it or clarify what you were going over. And I try to. I try to change it, Jerry. I try to say it differently, come up with a different analogy, a different metaphor, because everybody learns differently. Everybody hears things differently. You're welcome, Wayne. I think that clears it up. That kind of shows the whole life cycle from strong to weak for when you start getting into those little maybe areas, right? When it's not just one or the other. Let me know if that helps, and if you have any questions to go beyond that, I got you, man. No worries at all. So we're going to learn. You guys are going to simulate. You're going to post in the room. The people that post the most get the most help. The people that ask the most questions always get their questions answered. There is no limit on the questions that you can ask. Participation in this room is going to get you moving forward faster, guys. I've been doing this for 5 years, and that's been true for 5 years. The second thing we're going to do is we're going to simplify. We're only going to talk about this one trade. We're going to embrace it. We're going to wrap our loving arms around it, and we're going to focus on this high probability trend trade until it becomes easy. And once it becomes easy, once recognition is there, it's going to open the door for what we call medium probability trades. And these are when most of your indicators agree for the trade. However, a small issue exists, guys. Your ability to read your charts will identify that issue. When you're executing medium probability trades, you're going to take them, you're going to manage assertively. Your ability to read your indicators is going to allow you to manage assertively. And if there's trouble in your way, your chart reading, your ability to read the indicators is going to identify it. And you're going to take profits. You're going to get to a zero loss level. And that's going to be the second trade on the plan that I give you, is one that says, hey, one of my advantages is gone. Let me make sure I still have everything I need to take the trade. Your job in your first 20 days with me is to know what looks you're going to commit to begin to recognize the pattern, to learn them so that they become easy, so that they slow the market down. That's what we're going to do in the first hour, and that's what the second thing is really going to do for you guys. Post in the room, annotate everything, write too much, be an over-communicator. And then use the spreadsheet that I give you every day. Use the spreadsheet that Nexgen gave you when you downloaded your software, whether you are a demo or whether you are an owner. You got this spreadsheet, guys. And if you're just a demo and we're not for you, keep it. We're not going to take it from you. There's 4 tabs on this spreadsheet. The first one is what it looks like when your rules are met in the green. When I have strong triggers, I have taken 54 pictures. Well, probably 53 because there's an empty one, 52. 52 pictures of what it looks like to have rule number 1 met. 52 pictures that are annotated, describing the look and exactly what it means to you. I'm going to give you a little something so you guys can start your own little journal of these pictures. But strong triggers are an advantage. Weak triggers, well, Wayne, what are they regarding? Otherwise, I'm going to wait until I start going to charts. So Wayne, there's no question on this. That's strong triggers. That's smalls above the large. That's strong triggers. You're overthinking, Wayne. So when I go through momentum, I'm going to go through that picture that I put in there for you, okay? I think you're overthinking it because you're not taking one concept, Wayne. You're taking one concept combined with another concept, and you're trying to create expectations based not only on trigger strength, but also the termination, whether it becomes a strong or weak top. You're asking me string theory, but you're presenting it as basic math, if that makes sense. So I'll find a way to cover it, work it in. So guys, strong triggers, weak triggers. We're going to know the difference. Clear path, terminations. You're going to know the difference, and this is going to help you a lot. There's the client trades. I don't know what that means. What's a quark? Are the quarks up or down? Here everything is up. Here it's gone down. Do you see it? This is a termination no matter what. I'm not going long. Oh, it's quantum theory? I'm not that smart. That's why I can't do the spring theory, or the string theory. I don't even know what string theory is. We'll come to it, Wayne. Wayne knows that I'm like a prairie dog and I'll digress all over the place. He's like, I'm going to get my stuff answered now. I like it. I do, guys. I get distracted. The second tab of the spreadsheet that you'll be using, this is just a study guide for you. This is over 400 pictures of Nexgen users presenting in the room, me taking their pictures, and man, if they're hitting all the rules, I'm stealing it and I'm putting it in here so new people can come through and study it and learn these patterns and commit them to memory. There's how to identify your entry point for longs and shorts. There's a very basic management plan that'll be given to you. And then there's ideas on when you can manage a little differently. There's patterns that repeat themselves, and that's kind of what Wayne's doing right now. Wayne has mastered momentum. Wayne understands clear path, and now what Wayne is doing is Wayne's starting to recognize patterns beyond the basics and trying to figure out how to work them into something, how to turn them into either an advantage or a reason not to trade. And you'll see people doing that in this room, and it's awesome. But that's where the new people are headed a little bit, because you will begin to see things. Things will jump off the page at you. So take all your pictures and put them in your trading plan. Every time your rules are met, or even if somebody else presents in the room, say Bob B. the Man posts a high probability trend trade where every rule was met. And you're like, oh, that's the perfect trade. Steal his trade. Put it in here. Commit that look to memory. You're going to learn how to manage for yourself, and you're going to begin to see patterns. And then finally, there's the trade tracking sheet. This is the very last page. And this is because, man, even the CME says, track your trades, track your progress, keep a journal. And this isn't just busy work, guys. This is going to pay the most dividends. This is going to have the most returns for you, because every time you take a trade, you take a picture, you annotate the whys, and you get feedback in the room. If you're really serious about doing this, that's your path on every trade you take. So you're going to go back tomorrow and you're going to study what you did today, and you're going to ask yourself what worked and what didn't work, and what felt easy and kept me relaxed, what felt forced. You're going to begin to recognize patterns that are bringing you success. You're going to begin to recognize patterns that are taking that success away from you. If you give me 4 or 5 annotated pictures in this room, I'm going to start to see where you need a little bit of help, and we're going to work together to fix it. And I'm also going to see what you do well, and I'm going to praise the hell out of you, because I don't know about you guys, I love attaboys. I work on attaboys. If you tell me I'm doing a good job, I want to do a better job. And I think that's human nature. So I will celebrate every victory in this room, but I'm also going to tell you when you're messing it up, or when you're getting lucky, or when you're fighting things. And we're going to work together to get you exactly where it is you told us you wanted to be. So, our next hour. Learn the rules. You guys post in the room anything and everything that's on your mind. Interrupt, ask questions. And then finally, we're going to simplify. I'm going to give you everything that you need to be successful with this software. The only thing Nexgen can't provide you is, one, the work ethic to get it done, to take those pictures, to annotate, the courage to participate in class, and it does take a little courage to put yourself out there. Guys, I can't give you the repetitions to make it easy. That's on you. You've got to take the pictures and do the work, but if you do, you're going to get out of the software what you put into it. So, what are we looking at? Let's do this. Large chart and small chart will both have trigger lines on them. The only thing that you need to know about trigger lines is which are the small, two solid lines work together to create the small, and which are the large. Two dashed lines create the large triggers. Trigger lines come into everything you do. Trigger lines are going to be used first on the large chart to define momentum. Trigger lines are going to be used next on the large chart to define termination conditions. And then trigger lines are going to be used on the small chart to define entries, guys. And the only thing you have to know about these lines is that these are the small and these are the large. Both small and large charts will have areas. That's the generic term for horizontal lines on a large chart, on a small chart. These areas have names. There is a divergence high, which is a magenta line, and it prints if there's a loss of momentum at this pivot. And my new favorite way of describing it, if the buyers are in control and the market is going up, this pink line pinpoints exactly where the sellers said no more, where they stole their momentum and took over. You'll see it as a cyan line from a low. Sellers are in control. The buyers said no more, stole their momentum, pushed it up. This cyan line prints. You're going to see red Fibonacci resistance. You're going to see blue Fibonacci support. You're going to see yellow 1-to-1s. Your workspace has these little pink dots. I want you to ignore them. And I know that's hard. I'm trying to get my brother to pull them out of the generic stock. These little pink dots come into play if you become a NASDAQ trader in a much higher time frame. On these smaller time frames, they're just pretty. So learn how to ignore them. And guys, we're going to use those triggers in areas. And you're going to be able to recognize 3 rules to put you into a trade that typically wins 70 to 80% of the time and create an awful lot of confidence. And that's what we're going to go through right now. We're going to go through strong triggers. We're going to let the large chart lead the way. The big chart must define rule number 1 as true. So first we're going to let the large chart define the direction. Which way should I be looking? If the background is green, I'm looking for long trades. The market's going up. If the background is red, I'm looking for short trades. The market's going down. Unless you're colorblind, this is one of the easiest lessons you're ever going to have. If you're colorblind, when the small triggers break above the large triggers, it paints the background green. And when the small triggers break below the large triggers, it paints the background red. And this comes into play because the only way... Better Dad, I did that for you, explaining why the color changed so that you can use these. And even though Wayne just told you that they typically cause a little fight, I'm just going to tell you guys, they don't qualify as areas. Not for terminations, not for entries on the small chart. You may find a way to use them. But for the sake of ease, for the sake of being consistent, for the sake of keeping it simple, on crude oil and the S&P, these little pink 1-to-1s are very rarely impactful and therefore can be ignored. Because more times than not, they don't do a damn thing. And the only time something works its way into our arsenal is when it has been proven to create a result more often than it does not. So we're going to start with strong triggers. And Better Dad, that idea of why it paints it green becomes important because the only way I can ever have strong triggers in an uptrend is if my small triggers are green and if my large triggers are green, if everything is up. And the only way I can have it in a downtrend is if these break down and below the large triggers, if everything is red and on its way down. And strong triggers means that there is separation between the small and large. It looks like scissors that have just opened up. And this gap between the small and large, this separation, this lets me know whether it is going up or down, that the odds are favorable for the market to continue down, or that the odds are favorable for the market to continue up. So anytime I see strong triggers, I instantly say to myself, the odds are favorable for that market to continue up or down. This is my first advantage. And guys, odds favorable momentum can push a market. It's difficult to stop. Odds favorable momentum can break key areas. Odds favorable momentum. Guys, it can cover a lot of the mistakes that new users make. And when I think odds favorable momentum, this is exactly what I see. When this thing is cranking any direction, it is hard to stop. But the opposite of strength is going to be weakness. And when I have weakness, when my small triggers work their way inside of the large triggers, when the scissors close, guys, with that weakness, anything can happen up or down. This is when areas tend to hold. This is when the market seems to retrace from the middle of nowhere. And here we go. I just want to do this. When I see weak triggers, this is what I think of. That little smart car as opposed to the big semi truck. And here's your new user thing. No matter how much you wish that little smart car was strong triggers, guys, it's not. I don't care how many skulls and crossbones or roll bars you put on it. It's still a dinky little smart car and it's not momentum. So for you brand new users, commit. Let it either be strong triggers or let it be weak triggers. And that's going to keep you focused on the absolute best of the best as a new user. And then Wayne, I think this is what you were talking about. Guys, odds favorable momentum is the best of the best for short trades. But as you grow with the software, you're going to find more and more opportunities. So with both triggers down and one line inside, you no longer have the best momentum look. You have the beginning of weakness. When you grow with the software, short trades can still be taken with the clear path. You're just going to have to manage them a little more. And then even with weakness, you may find a way to take care of things, and you're definitely going to have to manage them more assertively. And then weakness, right at support, is when these areas are most likely to hold, where they're most likely to create a bounce. Guys, you'll never know whether or not strength is going to push or weakness is going to change directions. But more often than not, with strong triggers and nothing in the way, the market continues. And more often than not, with weak triggers, you see bigger fluctuations, random retracements, fights at areas. So, for the brand new user, let it be strong or let it be weak. And don't worry about the middle stuff yet. You'll get there. Between separation and closure, guys, this is where we're looking to buy Fibonacci support on that smaller, faster chart. Historically, you can go back and you can see these tails or wicks on a large chart. That's that small crowd fight. That's that small chart retracement. You don't see it on a large chart. Do you see how even with the small chart retracement, momentum never wavers? You never lose momentum. The separation stays consistent. Guys, that's important because it's the refinement process. We don't lose the advantage of momentum in that refinement process. And you'll be able to go back and see these tails and know that they were potential long trades and know that they were potential short trades. And then once you have momentum, and I'm going to ask you guys, is everybody good with that? Momentum, what market is this? This is the S&P. Momentum is nothing more than a separation. There is distance between the small and large. This is the best of the best. And then that's weakness, and that will always be weakness. And notice how weakness bounces right at a key Fibonacci area. Pretty crazy, right? Exhibit A. Strong triggers. Strong triggers. But guys, this is only one piece of it. Right now I have strong triggers to the upside. But strong triggers isn't a trading plan, guys. It takes momentum, path, and entry to get into a trade. But once momentum is in play, we're a third of the way there. We have 33% of our advantages. Now I got to make sure that there's nothing in the way, that there's no termination conditions, that there's no areas likely to stop the market, no areas that may reverse the market. These are those horizontal lines on a large chart. And that's the easiest way to think about it. These lines on a large chart, these are where decisions are made by the large crowd. These lines on the large chart may reverse the market. They may create an untradeable bounce. They may create a fight between the buyers and sellers. They may break. When you go into understanding termination conditions, I want you to understand that you will never be able to predict the outcome. The market doesn't care what you think, what you want, what you hope for. And Wayne, I think you're trying to beat the system. Can the trigger lines tell you if it's more likely to break or not? That may be what you're trying to get out of it. Not beat the system. That doesn't sound nice, but you know what I mean. Can I give myself an edge using momentum as we go into areas? And Wayne, the answer is no. The answer is no, because strong triggers don't always break areas. Weak triggers don't always stop at areas. It's not predictable. It's not predictable. So let me show you the best data you can have to make better decisions. And it took me a second for that to click. And it's a totally valid look because you're looking for more advantages. You guys will know exactly where the large crowd is most likely to make decisions, where the market could turn, could spike, could reverse, could break. You'll never know, and that's what I want you to accept. You'll never know. Support, resistance, one-to-ones, divergence highs, divergence lows. Guys, this is where the large crowd is making decisions. So every time the large crowd reaches an area, every time price bars hit resistance, every time price bars reach Fibonacci support, I want you to ask yourself, where are my trigger lines? Where are those small and large triggers? And if they remain below Fibonacci resistance, whether you have momentum or not, if they remain below Fibonacci resistance, resistance could stop the market. Resistance could create an untradeable bounce. Resistance could break. Resistance could reverse the market completely and become a strong top. And Wayne, I think this is the picture that's going to help with the answer that you need. No matter what the trigger line condition, more often than not, the area will create some sort of negative impact to your trading. No matter whether it is strong triggers or whether it is weak triggers, the area is more likely, based on thousands upon thousands of pictures and study, to stop the market than it is to just arbitrarily break. That's how rule number 2 came into be. Is John Novak went back and he took 1,000 pictures of Fibonacci stopping the market and said, wow, my advantage is gone when it reaches and the triggers are below. This is where I have to sit on my hands. Wayne, that was an 11-hour period before Thanksgiving. 36 times the rules for termination conditions kept you out of a loser. 6 times you had the opportunity because they broke and you could make money to the next area. I thought it was a pretty impactful picture. So when price reaches resistance, ask yourself, where are the triggers? Better Dad, does it make sense? Trina, RO? Who else is in here that's still kind of new? Guys, that's your recipe. You're welcome, Wayne. That's your recipe every time. All you have to do is wait for the reaction, because it could be a bar on that large chart big enough to ruin your long trade. And it could be a fight that just seismographs right on that line and gets you suckered into 3 or 4 different trades when you shouldn't be trading. It could be a full reversal. And guys, if you get a full reversal off of an area, none of the triggers break, large triggers go from green to red or red to green, we call that a strong top or bottom. And no matter what the trigger's momentum was coming into it, a strong top or bottom is rule number 1 for the white bar breakout trade. That'll come to you later. A strong top or bottom is rule number 1 for an HVA trade, a little more advanced trade. A strong top or bottom is rule number 1 for the 50-50 trade, for the medium probability trend trade I'm going to give you a plan for. So the only trade that it isn't mandatory for, really, is the high probability trend trade. This is not rule 1 for a high probability trend trade. But any high probability trend trade that sets up after a strong top or bottom, that is the best of the best. That is your best chance of success to win that trade. But areas break. And this is what it looks like. When price reaches resistance, everybody in this room is going to say out loud, scare the ever-loving bejesus out of your pets. Where are my triggers? And if the triggers remain below, as they do here, small and large, guys, it's a termination condition, and your highest chance of success will come from not taking a trade into that area, waiting for the reaction instead. The area is considered broken and your path is considered clear over here when both lines of the small triggers and both lines of the large triggers get above resistance. Once this happens, the area is what we call broken. And once it's broken, resistance behaves as support. And guys, your path will remain clear until you reach the next line. And then we go back to number one. But there is that middle phase, guys, and this is going to be your medium probability scenario. When your small triggers smash through the area, but the large triggers haven't made it through yet, so you know it's not broken, as long as you have odds favorable momentum, you can say this area has the potential to break, but it's not broken yet, so I'm going to manage assertively. My path isn't clear, so I'm going to insist on having the best momentum with no loss of momentum, and I'm going to insist on having a beautiful entry area that is clearly defined. And guys, that's a medium probability trade. Not having a clear path yet is the issue that you will identify with your chart reading. So it happens both ways. Brand new users, it's either a termination or a clear path. With a little bit of experience, a little bit of feedback, and a little bit of practice, you'll be able to capitalize on these medium probability trades, and you'll realize that most of your trades are going to be medium probability. There it is again. Odds favorable directly into resistance. Stopped it cold. Strong triggers breaks the area. With that potential to break, there's one of those tails. That might have been a trade. Weak triggers directly into support. And that's where the reversal came from. With the potential to break, there's one of those tails. May have been an opportunity for you. Strong triggers down, clear path. There's another one of those tails, potential entries. And guys, you can see that the market can turn from the middle of nowhere. And now, the dance right at key areas, there's that indecision, the fights that can happen. Eventually, it breaks up. Heads back down, had the potential to break, but did not. There's a lot of action in the market today. Big untradeable bounce coming off of resistance before continuing up, but a potential trend trade entry to get you to that area of resistance. And now we are weak triggers, and we are directly into a divergence high that none of the triggers have broken. I have to sit on my hands for a second. Pretty cool, right? Everything that we just talked about right there. And I'm glad that we saw a couple examples of the market turning from nowhere. Even with odds favorable momentum and nothing in the way, guys, the market can still change direction. We are not in charge of the market, but your small chart can give you a little heads up when that change is coming. Remember, large chart's big, slow, ambling down the highway. Small chart shows an awful lot of information inside of one of these bars. And anytime your small chart has three divergences in the same price range, three losses of momentum, three cyan lines from a low, three magenta lines from a high, this is a termination condition. This is a big red flag that says, I know you don't see it over here, but man, something's brewing. The buyers keep saying no, 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 and that third no can push it the other direction. Morgan, when you say it won't load, what do you mean? Just a gray screen, nothing on it, no bars? Or it's taking too long to load, or you have bars but no indicators? There we go. Morgan knows that I speak through pictures. You're loading tick data right there. So you're still loading tick data, which means it's in the process of coming together. For whatever reason, the S&P takes longer than my NASDAQ. My S&P is the only chart on my supercomputer that takes a minute or two to load up. Dang it all. Joe dirted me. So guys, Three divergences in the same price range may terminate the trend, may create an untradeable bounce, may reverse the market. Three divergences may break, guys. When you see this, this is the only small chart termination condition that'll talk me out of a high probability trend trade on the large chart. Let's see, just for grins, if that happened. I'm going to put a circle around that. And let's go look on a small chart at some of these pivots and see if there's any truth. Well, there's three divergences right in the same price range, and the market pushed down. There was your trend trade. We'll talk about that one. That was beautiful. Only two divergences. No, 1, 2, 3 divergences. They gave a little extra push and then they went down. And that helped you not get caught looking for that next long trade. If we come back here, it was two divergences that changed the direction. So three divergences in the same price range may terminate the trend. And just because examples love to present themselves in the live market, guys, if price ever reaches the mid-band and the large triggers are all the way up here by that reversal bar marker, well, that's our last termination condition. That's when you don't trade into the mid-band. That's when you say to yourself, oh no, it's a termination. There's no clear path. Let me not take that short trade into the area because this area is more likely to hold or create an untradeable bounce. And the idea behind hitting this mid-band and the large triggers are a full bar away is that price loves to return to large triggers. There it is, beautifully. Mid-band hit, price returns to the large triggers. Guys, when the mid-band is hit, it's more likely to suck back to those large triggers if they're a full bar away than it is to continue down. Price returns to the large triggers, and that's kind of our segue to the entry rules. You're going to use that concept. But I got to give you this one first. And man, this is for my Jerry 1967s, and this is for my ROs, and this is for my Better Dads, and this is for my Trinas, and my JKs, and all you guys that are just getting going here, that feel a little despondent, a little put out, that you can't seem to get a clear path, because there's gonna be times when you can't get a clear path. There's going to be times when the areas are stacked. There's going to be times where you are sitting on your hands, chomping at the bit, looking at odds favorable momentum and just saying to yourself, dang it, why can't I get my rules met? This is 90% of your day, I promise you. If you trade for 6 hours today, if you are actively in the market with rules met for 36 minutes, you had a busy day. The futures markets trade trillions, billions every hour, and you don't have to be in every move. And it really is okay to do nothing. And what you'll find with a little bit of practice is that there is more than enough money to be made with momentum and clear path. Trading from Fibonacci, trading towards Fibonacci. It takes $400 a day to put you in a six-figure income with your trading, guys. $400 a day. Let that sink in. That's not a lot of money in a market that typically exchanges $1 trillion a day. So, let's recap. Large chart leads the way. Large chart tells me which direction I should be trading. If the background is green, I'm looking for rules to be met for high probability trend trades long. If the background is red, I'm looking for high probability trend trades short. Once I define the direction, I need to make sure that I have momentum through strong triggers, because momentum pushes a market. Momentum can break areas, momentum can cover mistakes, and momentum is the first advantage for a reason, because momentum is pretty awesome. Once I have momentum, guys, I got to make sure there's no termination conditions. Why? Because it just doesn't make sense to trade into a brick wall. Because even a brick wall is going to slow down that semi. Why not let it be wide open spaces? Why not have that clear path? Because once I have momentum and clear path, let me rephrase that. Once you have momentum and clear path, you have everything that you need to create a successful plan. You have every indicator you need to say that trend is likely to continue and there's nothing in the way to stop it. So then you're going to turn your attention to your smaller, faster chart. This is your refinement chart. This is where the accuracy comes in. This is where we take that very broad stroke of a brush and we refine it down to the point where the market is most likely to continue. And your entry is going to be so awesome that you're going to use a limit order. You're going to wait for the market to come to you. That's the accuracy. You're going to call your shots. And you're going to use that limit order to buy or sell a pullback, that little push created by the small crowd, that fight. And you're going to have that limit order waiting at areas, at fibs, at mid bands, at yellow 1-to-1s. Because the same way areas can stop forward progress on a large chart, they can create a bounce on a small chart to continue with that large chart trend and momentum. And here's the key. And guys, I think this is probably the most important part about the entries, is that your areas need to be inside of triggers. And when I say inside of triggers, your large triggers, the same way we saw them pull price back on that mid-band, from that mid-band, price returns to the large triggers. Price almost always goes back. I've never seen it not, but I hate to use blanket absolutes. So your small chart has the 5-1 large triggers on it, and it has the 13-2 large triggers on it. You'll hear the 13-2s referred to as synthetic. Anytime they come from a different time frame, whether it is a fib or a mid-band or a trigger line, we call it synthetic. I don't know why. That's just the word we use. Price may return on that pullback, on that pushback, on that fight, on that retracement, whatever you want to call it, somewhere from the top line of those triggers to the bottom line of those triggers. Guys, this is where the retracement is most likely to occur, and you can identify it in a fraction of a second by looking at those trigger lines. You can become even more accurate if you insist on what we call favorable large triggers. Because favorable large triggers mean that the large triggers and the synthetic triggers are stacked, one on top of the other, like two snakes riding piggyback. And guys, favorable large triggers gives you the smallest little location where the retracement is most likely to occur. Favorable large triggers give you the least amount of room to shoehorn a fib, a mid-band, or a yellow 1-to-1 inside of them. This is going to increase the accuracy. This is the best way to take the trade. It's not the only way to take the trade. When your triggers are split, your risk is going to be a little higher. Your accuracy is going to be a little decreased. So favorable's the best for you new kids. Let's define an entry. This is my small chart because the large chart rules are met. So in this scenario, my large chart is green. Means I'm in an uptrend. My large chart has odds favorable momentum. The smalls are above the large are wide, the spaces between, the scissors are open. My large chart has not reached an area. My trigger lines are above all the old areas. My path is clear, wide open spaces. I'm going to find an entry. So this is what your small chart's going to look like. And your fear of missing out is going to kick in. You know you should be in a long trade, and you're going to want to jump in. But guys, we're going to wait for a reversal bar. You're going to wait with everything saying up for a down bar. And this down bar signals the beginning of the fight, the beginning of the retracement. You can define where that retracement is most likely to go just by looking at the trigger lines from the top line to the bottom line. You create this big white box. Price may go down to the bottom of that box, somewhere in that range. And the tighter they are, one on top of the other, the smaller this box becomes, which means the higher the accuracy is. But watch how the magic of the methodology kicks in, guys. This giant box turns into a cute little box, just a little window. Because once you understand where the market may return, you know that you need an area inside. Triggers aren't bouncy. Areas are bouncy. Areas can be fibs, mid-bands, or yellow 1-to-1s. Areas cannot be pink 1-to-1s. Areas cannot be divergence highs and lows. Areas are fibs, mid-bands, and yellow 1-to-1s. And this box goes from the highest area inside of triggers to the lowest area inside of triggers. And that box is your window of opportunity. That box points out precisely where the market is most likely to bounce and continue in the direction of the trend. That box identifies where the small crowd is most likely to fail in their push against the large crowd. Guys, give me a Y if you can hear me, please, for Alessandro. Thanks, guys. Give me 1 second while I reply to him, guys. There we go. Hopefully he gets that. And guys, this is for everybody. If you ever can't hear me, killing Discord typically fixes it. And when you kill Discord, it helps out. So hopefully he reads that. But that big flood of Ys, after you tell me you can't hear me, that lets you know that everybody else can. So if you ever can't hear me, just look for those Ys, and it means that you need to kill things on your end, and that usually fixes it. Hopefully he knocks that out and he's good. So guys, reversal bar prints, not my entry. Trigger lines define where the retracement is most likely to go, not my entry. Areas inside of triggers, this is where the bounce should happen. If this is going to be one of those winners, that's where it's most likely to come from. So you are going to activate a limit order 2 ticks above that highest point of support. Because remember, your large chart is odds favorable momentum with nothing in the way. I want to get in high. I understand it could go lower, but I don't want to stumble over a couple pennies hoping to save a few dollars. And now I've done everything I can do, and you will have done everything you can do. You will never be in control of the market. You'll never make it go up. You'll never make it go down. You'll never guarantee an entry. You'll never guarantee a winner. All you can do is trade a pattern that has been proven to win more than it loses. So if price comes down and reaches your limit order, the pattern is complete. The momentum was there. You had it. There's nothing in the way. You've pinpointed where the market is most likely to continue. And guys, this is your high probability trade. This is the best of the best. This is the greatest chance of success as a brand new user that you can have. This is a trade that typically wins 70 to 80% of the time. So we're going to go through it again, both directions. Everything is true on the large chart. My advantages are in place. I'm going to resist the urge to jump in as a brand new user, and I'm going to wait for the reversal bar. It signals the beginning of the pullback. The reversal bar is not my entry. I'm going to define where the market is most likely to push down. That's my large triggers, synthetic triggers. And I'm going to define clearly where it's most likely to bounce. And guys, very often it's a window. Very often it's more than one area. It's a fib, it's a mid-band, it's a yellow 1-to-1, and there's a little space between them. The blue shaded area shows me where the market is most likely to bounce, and I'll never know which one it's going to bounce off of. So I'll activate my limit order 2 ticks above the highest in a long trade. Anything below the triggers. Anytime price pushes beyond the retracement area, anytime price blows through the areas most likely to create a bounce, my advantage and my edge is off the table. Rule number 3 is no longer in effect. Once you get to the wrong side of the trigger lines, guys, you don't know if, when, or where that market is going to continue up. Advantage lost. So any lines on the wrong side of the triggers are not a part of the equation. In a short trade, This picture assumes that we have odds favorable momentum, that there's a clear path, the trend is down, the rules are met. Waiting for the reversal bar, not my entry. It's the beginning of the pullback. Defining where the retracement is most likely to go through trigger lines, and then pinpointing where it's most likely to continue with the large chart trend, where the small crowd is most likely to fail, using the area inside. And guys, there is one area inside of triggers here. It's a mid-band. Your order goes 2 ticks below the mid-band. Anything beyond the triggers, on the wrong side of the triggers, is not a part of the entry equation, guys. This is where your advantage is gone. This is where rule number 3 is no longer in effect, and you have no idea if the market, when, where, whatever, it's going to stop. So you're going to use the idea of being able to pinpoint exactly where the market is most likely to continue, and this is going to be your first stop placement. Hey, good morning, Junior. Your first stop placement is going to be placed where the market should not go. That's the language. Where the market should not go. If this is going to be one of those 70 to 80% winners, I love it. Junior, now I just got to get you here an hour earlier, brother, so that you can learn these basic rules. Or at least go watch the video of the first hour. Guys, once you pinpoint where the market is most likely to continue, you know where it shouldn't go. It shouldn't go 4 to 5 ticks above those trigger lines. And if it does, advantage gone. No more advantage. No more rule number 3. I don't know if or where it's going to stop, guys. So your initial stop placement will be 4 to 5 ticks beyond those trigger lines. And that's cool because you'll be able to define your risk before you ever enter. So here's the 3 advantages put together. Rule number 1 says strong trigger lines. My large chart has strong trigger lines. This is historical. My path is good, has the potential to break. Guys, price is trading all the way up here on that big bar when the reversal bar prints. Notice that the tail lines up with an area inside of triggers. That's your pattern. This is how you're going to study this trade. You're going to go back on a large chart. Man, they are moving, aren't they? Where were those circles that we did? That's a pretty good look there too. I hope you guys are making money today. I'm going to go back to 9:47 a.m. I'm going to look at what this circle looked like with the potential to break. Man, that looks just like the picture that I just posted. All right, so this is where I ask you guys, do you see it? The background is green, the trend is up. The momentum is as strong as I could ever hope for. I would close it down and try again, Morgan. The areas had the potential to break, and guys, price pulled right back to support, right inside of the retracement zone, and it never got below the triggers. Pretty awesome, right? That's your look. Up top, I had weak triggers, even with a clear path. And it didn't work. There's something to those rules, guys. So that's what we're learning to identify. That's what we just covered. If you're brand new, this is for you. They're not. So what does that mean, Better Dad? We've talked about this 2 days in a row. What does it mean when the smalls have smashed through but the large haven't cleared it yet? Is that a termination condition? Is that potential to break? Or is that a clear path? What do you think? Okay, but let's define it. Potential, Jerry. Perfect. So check it out. No triggers, that's your termination, Better Dad. Guys, can everyone in the room give me a why? Price reaches this divergence high. The triggers remain below. I'm not trading into that area. I'm waiting for the reaction. Now my small triggers are through the divergence high. My small triggers are through the fib, but my large triggers are still lagging. This is the potential to break because of the momentum. I can look for an opportunity, but I might have to manage it assertively. So if I take this entry at the area, inside of triggers, if I choose to take this trade, I'm going to identify where trouble could happen. And if something changes, I might exit that position. I'm going to get to a zero loss level quickly. And then once we get above that fib, the fib is broken. And once we get above that divergence high, divergence is done. And my path remains clear. Guys, look at this. Right until it runs head first into a Fibonacci area. I knew where the market was likely to go. I also know where the market is likely to stop. And they overran a little bit, but they sure did stop. Does that make sense better, Dad? So we define it as the area with the potential to break. And what that does for you is it sets you up to manage assertively if need be. It's not a high probability trend trade. It's a medium probability trade. So remember, Better Dad, high probability trend trade is the best of the best. It is sunshine and unicorns. It is glitter bombs and babies. Yeah, you're good. So in order to have a high probability trend trade, let's go find one. Just for clarity. I love clarity. This, my friend, odds favorable momentum. All the trigger lines are above trouble, and we haven't reached trouble. So this is a high probability trend trade look on a large chart. Does that make sense, everybody? Yeah, that's the best of the best. It still pulled right back to support inside of triggers. But Mark, there was a 1-to-1. Who cares? Terminations are defined on a large chart. But Mark, there was divergence. Who cares? This is the best look ever. It takes 3 to keep me out. And guys, it pulled right back to the freaking tick to support inside of triggers and continued right up to the fib where it bounced. It's not one of the rules, is it, Hamid? It's not one of the rules. I need momentum, path, and entry. It depends on your plan, Wayne. It depends on your plan. Guys, remember that my first hour is dedicated to the absolutely positively best of the best way to take a trade. The one that has been proven to be the most effective and efficient way to take a trade. That's why when we talk about the high probability trend trade, we mention that a strong top or bottom is awesome. But guys, if I have momentum and a clear path, my first two are met. Go find an entry. And look at that target. If your target was Fibonacci resistance, it went one tick over before it retraced against you. Pretty cool, right? That's the accuracy. That's the methodology. But you've got to learn strong triggers, weak triggers, clear path, termination. So this chart reading 101 is designed, and I love it because more experienced users, when I show a trade, they start going through all the other potential things that could be going on. And that's exactly what your brain's going to do, guys. So keep it simple. They're either strong or they're weak for your first week or two. They're either a clear path or a termination condition for your first week or two. Guys, take these pictures, annotate these pictures, put them in your spreadsheet. If you take 5 pictures a day of each, that's only 20 pictures. You're done with this task at the end of the week, guys, and you will walk away an absolute better chart reader, because you can't take 25 pictures of this and annotate why they're strong and what it means to you and which rule it pertains to, and ever screw this look up unless you choose to screw it up. And the same way is true with weak. Guys, you can't go take 25 pictures of smalls inside of the large, writing that anything can happen, that your rules aren't met, and accidentally take a weak trigger trade. Are there trades that can be taken with weak triggers? Yes. Are there trades that can be taken without a clear path? Yes. Are there trades that can be taken counter trend? Yes. But as a brand new user, doesn't it stand to reason that you should put yourself in the highest chance of success? The best of the best? Learn how to do it easy before you try to expand to more difficult trades as you're going through that drill. These pictures are your cheat sheet. Make sure you're taking the right pictures. Is the market coming from a strong top or bottom? Hamid pointed that out, right? Guys, it's not mandatory. You can take a trade without it, but if I get a no triggers through termination that reverses the market, I am showered with warm fuzzies because I know that that's the best of the best way to take a high probability trend trade short. And I know that if a termination where none of the triggers broke through reversed the market, when my rules are met over here, this is the best of the best way I could ever take a high probability trend trade. But I can still take one without it. Strong triggers is always strong triggers. Weakness is always weakness. Termination is always a termination condition, no matter what the momentum says. Potential is always just potential. I may have to manage assertively, and a clear path is always a clear path until I reach the next area, and then it sets over. And then I just got to figure out where to get in. So guys, study these. Print this checklist out. Hold yourself accountable. Write these rules on every chart that you take a picture of, on every trade that you take. And you will cement the visual with what it means to you inside of 30 days. I've never had anybody use this checklist truthfully and do worse than 70%. And I'm telling you that right now. If your goal is to win more than you lose, this puts you in a position to win more than you lose. And Hamid, it's not a rule, but if you're adding it in there, it's amazing. And I had an engineer run this exact plan through, I think it was TradeStation back then. The exact rules, went through it, created a plan, tested it over 400 days, and he was right in the low 80s percent-wise on the wins. So this is just the best of the best, guys, and that's what this is. This is your KISS plan. And your KISS plan is your stepping stone. Your KISS plan is your foundation. And I've had people get funded in prop firms by following this KISS plan in their first 30 days. And guys, this is just the first trade. You've been explaining tarting to your husband? He likes that. Husband, he likes that figure a lot. Oh, the 83? I bet. Is he a numbers guy? Oh, he's engineering? Yeah. My wife is the same way. She is the numbers and science lady. She's the RN with the MBA. Guys, I draw on people when I'm not day trading, so I'm the most artsiest, fartsiest, keep it simple kind of guy that you'll ever meet. This KISS plan, guys, this KISS plan is your first trade. This is the trade that allows you to see the trade that's going to probably bring you bigger profits and more money. But this plan, this KISS plan, the Keep It Simple Sunshine plan, because I can't call you stupid, HR stopped me from that. Guys, this optimizes your chances of success. This is the best of the best, right? So Hamid, a strong top or bottom is the best of the best. That's why I teach it in the first hour. But then through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. The more you can read your charts, the more patterns you're going to see, the more opportunities you're going to find, the more trades you're probably going to take, and the more assertively you're going to manage them because you're good at reading your charts. So until you learn how to do that, keep it simple, keep it focused, keep it basic. Give yourself the least amount of moving parts to worry about. You will write your own plan. But there's two things you have to know before you sit down to trade and you're not on the simulator, guys. When it's time to go live, when it's time to test your plan, you have to know why you're going to enter a trade. And, you know, the answer should be because my rules are met. Because my rules describe a pattern that has been proven to win more than it loses, that my rules have been tested by me, they have been verified by me, they have been validated by me. I'm not believing Mark. I'm going to go do that circle, that tail circling. And once you trust the pattern, guys, there's no reason to never take the trade. Because you know every 10 trades that you take, you're likely to win 7 or 8 of them, and you're destined to lose 2 or 3 of them. And the thing that you have to understand is that you don't know when the winners are coming, and you don't know when the losers are coming. So you focus on the process, the execution of the method, understanding that the pattern wins more than it loses. And that pulls a lot of the emotion out of trading. And it makes losing a trade so much more bearable because it just becomes a cost of doing business. And then you have to know why you're going to exit. And this is where people fall short. Because getting out of a trade means that you're not making any more money in that trade. Getting out of a trade means that it no longer has the opportunity to win. Or getting out of a trade means that they can't turn around and take your money. And guys, your emotions are going to drive your management. So exits need to be getting out of the position because the profit target hasn't been reached yet and my advantages have gone away. So 4 to 5 ticks beyond the trigger lines, that initial stop placement, my advantage is gone, I'll exit the trade. 3 divergences print in the middle of a trend trade, my advantage is gone, I'll exit the trade. Those are the very basic ones, and you'll find other ways as you're a chart reader. So define your entry, and guys, don't fight the large chart. This is how you're going to eliminate 70 to 80% of the losers that new users typically take. Don't fight the large chart. How to commit financial suicide. 1 easy step, written by my brother. Chapter 1. My friends are in trouble. They're trading against strong triggers. Are there times when you can do it? Wayne's raising his hands, but Mark, I found a pattern. Ron's raising his hand. Mark, there's a way to do it. Guys, you're not there yet if you're new. Just go with the flow. Chapter 2, warning signs your friends aren't paying attention. They trade in determination conditions. The most broken rule among new users is trading in determination conditions. And they use phrases like it should. They use phrases like it will, it's going to, it has to. Every one of those phrases is utter bullshit. Pardon my French. You'll never know. It shouldn't do anything. It may not do anything. I hope it will. There's another one. So guys, this is the easiest way to avoid a lot of trouble as a new user. Define your entry because entries create very manageable trades. Entries reduce risk. Entries, great entries, maximize profit potential. And then once you're in, you have to manage it. So the same way the KISS plan provides you the best of the best entry, guys, I've written the management plan for this plan to be very if-then, very pragmatic, very emotionless. If this, then that. That's it. So as a brand new user, I won't ever tell you what to do, but I will encourage you. Follow this management plan on your simulator and let it run out. Let whatever happens, happens. All you're doing is you're building up recognition, guys. So it's going to be 2 contracts. And the KISS plan is designed to help you understand stop placement and then most importantly, get you paid and get you paid fast. Because getting paid breeds success, guys. So if then, got to know entries to work the plan. If your entry is 2 ticks below resistance inside of triggers, then your initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. Embrace that language. If this is going to be one of my 70 to 80%, it should not go up here. This particular trade has $150 of risk per contract. You will know the risk before you ever enter the trade. You'll know how much is at stake before that entry is ever taken. You have to decide if you're okay with that entry. If you're not okay with $150 worth of risk, guys, don't take the trade. Because if you try to shorten risk below resistance, you're likely to get hit and watch it run without you. If you put your risk inside of the area where the market is most likely to continue, it could go up, hit it, continue without you. You have to be willing to accept that risk. Targets are defined at $100 and $200 in the KISS plan. They are predetermined and should not be moved. If you don't get stopped out, if this isn't one of that 20 to 30%, and a reversal bar prints in the direction of your trade, you will redefine where the market should not go. Your new stop is 2 ticks above that reversal bar. You have decreased risk from $150 per contract to $30 per contract. That feels pretty good. Steve, I know Ninja's been doing crazy things with people for a couple days now, and it's been random, so I'm glad you've got it worked out. People have been beating down Jason's door, and it seems to be a NinjaTrader issue. So, guys, if you ever have a problem, go to Tech. Let Tech help you, but I think this one may be outside of Nexgen. So, if I get a reversal bar, then my new stop is 2 ticks above it. And guys, I have virtually no risk. My targets are still 100 and 200. If I don't get stopped out for that tiny little doesn't hurt my feelings loss, it's going to go to my first target, guys. And when it hits your first target at $100, when it hits your first target, guys, those funds are automatically removed. One contract comes off. You are a winner. You're victorious. You just beat the market and you got paid, and you're going to move your stop to break even. And you're going to say, you know what? Money in the bank, nothing to lose. Because the second contract is designed to remind you, to build trust and faith in the idea that when you have odds favorable momentum and absolutely nothing in the way, that market is more likely to go down than up. That market is more likely to hit a $200 target than it is to come back and stop you out. So we're just developing trust. And if it goes to your second target, guys, that's a $300 trade. You're out. It's done. It's over. Palms aren't sweaty. Butterflies aren't there. Guys, that is a $300 trade. And a $300 trade, if that's the best you do each day for an entire trading year, that's a $75,000 year. Throw in a $100 trade there and suddenly you're in 6 figures, guys. 6 figures in a market that trades trillions daily. You have to make 200 per contract. If you can follow a plan, if you can embrace advantages, guys, you're going to see that that potential is there tenfold. And it also means, was that it right there? That if you take the entry at 64 and a quarter, you're out at 68 and a quarter with a $300 win. And as a brand new user, you've got to be willing to ignore what you could have done. But you will ignore what could have been because you're going to realize that there's going to be a time where your chart reading allows you to hold for bigger moves. Where your large chart says we're more likely to go down, let's hold a contract. Let's turn that $300 trade into a $1,000 trade. So, guys, that's the first hour. I'm going to redistribute here. There is the trade tracking sheet. And then I'm going to give you a zip file. And this zip file is cleverly labeled all you need. When I told you I would give you everything that you need to be successful with this software, guys, I meant it. You now have rules to follow. You know how to identify the rules. You know how to study the rules. You have in that all you need zip, the chart reading 101. So you have a clear path to become a great chart reader. You have the high probability trend trade checklist reminding you what it takes to enter the trade, making sure that you're following rules and it gives you something to write on that chart. Inside of that zip file is the high probability trend trade checklist, the KISS plan. There's something in there called the pictures you can take. And there's the trend trade simple. And the trend trade simple it's awesome. It's everything that we just talked about, consolidated into 2 pages on a Word document. Everything that we just talked about, consolidated into 2 pages. It's pretty awesome. So now we just have to practice. Now you have to get to where you want to be. Now you have to participate, right? You have to ask questions. You have to post in the room. You have to track your progress. That part's on you, ladies and gentlemen. But the feedback is coming right now. 15 hours every week, you'll get feedback on everything that you post in the room. 15 hours every week. Post your trades in the room. Win, lose, or draw. Because if you win and the rules are wrong, if you win fighting advantages, if you win doing things that don't win more than they lose, it's a short-term victory, but it's typically a long-term failure. Ask anyone that's blown out accounts trading into termination conditions. So to be sure whether you're doing it right, you just need feedback. That's what I'm here for, guys. 15 hours every week. I'm here to help you see what you're doing, to help you recognize the advantages, to identify your chart reads and make sure that they're accurate, to support you, and to give you options to become better every day. It's like giving yourself a swirly for fun. I like that. That paints a picture, Josh. So as we get into the second half, guys, I'm going to remind you that the key to everything that we do is building a foundation. Everything comes from that very solid core. So for you brand new users, I really do blanket you with very conservative rules. We focus on the recognition of advantages. I give you the KISS plan so that it optimizes your chances of success as you learn to read your indicators. So you're going to feel, and I'm not telling you how to feel, you're going to feel like Mark said no momentum is bad. Mark said terminations are the devil. Mark said no areas inside of triggers are a recipe for death. And guys, for the brand new user, these blanket rules increase your likelihood of success. They bring up your confidence levels. I do that because I'm like your grandmother, holding you close to my apron strings. I want to keep you safe. I want to bake you cookies. But eventually, you turn into a no-good teenager. You've spent some time with it. You're going to see more. You're going to do more. You're going to venture outside of that safety net. And you're going to find your way. You're going to find your trades. You're going to find your plan. But if you learn the process that yields the results seem to follow. Your process will change as you grow. And that's where the KISS plan comes in, guys. And this is why I give you that every day. Because if you keep it that basic, and if you follow simple rules, and most importantly, if you're okay not being in every trade, rather you insist on being in the best trades, you can find an extraordinary level of success with the software just through that KISS plan. And I've watched it repeatedly over the years, guys. And the further new users deviate from simple, the further you try to stray from the core before you're ready, guys, the longer it takes to get to where you want to be. So as we go into the second hour, question everything. I encourage it. But give yourself a little bit of grace, guys. You're new. It's okay to be new. And most importantly, it's okay to make mistakes. You will get 10 lessons out of every mistake, and you'll only get a high five out of doing something right. And one of the great things is to learn how to identify and avoid mistakes so that you can identify and avoid avoidable losses. So I'm going to go stretch my legs. Your S&P has odds favorable momentum with the potential to break, coming from a weak top. It may go down, it may go up, I don't know. But with a couple divergences, that's a trade I probably wouldn't take. That's just me. I sure will, Jen. And guys, if you ever have to get out early, let me know. I will stop what I'm doing and look at your charts and give you feedback and make sure that you have what you need. So Jen, let me scroll. I'm trying to find it. There's a lot of stuff. Boo, boo, boo. There you are again. I want to make sure I get your first one. All right. So I'm scrolling through. I'm going to click on all of Jen's. And guys, I don't mind doing this at all. All you have to do is ask. And Jen, I'm trying to get all of them so I can be at the bottom and give you the feedback that you need. We can have a conversation if we need to. And guys, that's kind of how it happens. I scroll all the way to the top. No, don't ever be sorry. I am always happy to help you. All right, here we go. Friday chili dog. Back of price clears trouble. Jen, this is you, right? You don't have odds favorable momentum. Aren't you supposed to have odds favorable momentum for a chili dog? Okay. Guys, I'm going to know your plans if you show them enough. So we decided to break the momentum rule on the large chart. But Jen says, I got nothing in the way and everything is screaming down. And she goes, Mark, I want you to notice that I do have odds favorable momentum on my small chart. So my large chart says clear path, room to targets, and my small chart says separation between the small and large. I'm going to take a shot. So she takes a shot. I don't know what this little one dinky one was. And then the second one comes out just above. And that's it. But Jen, do you see how while it's not here, it is here? So at least you have a fighting chance. Not saying it's the wrong trade, shame on you. I'm saying you put your gloves on by having it on the small chart. You're letting the small chart momentum drive the clear path on the large chart, and it's just quick profits. And I think you did it really well. Even if it was inadvertent, I think you pulled one off there. And Ron will tell you that there are times for exceptions when you get comfortable with the good stuff. So Jen says, check it out, Mark. That was a termination. And 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 that's a termination. Why would I trade into it? Why would I hope? Why would I wish? Why would I want? Everybody knows what my father-in-law said, right? Wish in one hand, poop in the other. Tell me which one fills up first. Jen chose not to poop in her hands. Good job, Jen. Your hands are still clean. Guys, this is the not my trade picture. This is the my rules aren't met. It is more affordable for me to take a picture instead of a trade. Let's see what happened here. Strong top, termination off the fib, full reversal, odds favorable, potential to break. There is divergence on a 50-50. You're absolutely right. And Jen says, I'll wait for a reversal bar since there was divergence. Jen says, it's not the perfect entry. I will force the market to go in the direction of my trade because it establishes my risk and it says, hey, we're going the same direction as these guys. And Jen, it's easy. It's beautiful. All the way down, as the triggers begin to weaken, you take second profits. Beautiful execution. Learning how to handle when it's not perfect. And you're using confirmation to overcome that little obstacle. Nicely done. Odds favorable. Potential to break. No divergence. Waited for the confirmation bar again. And took it up to the other side of fibs, which is interesting. Yep, and Jen, I want you to remember there's a time for confirmation. And I'm not telling you how to trade. There's a time for confirmation. If you can ever use the phrase, it's not perfect, wait for confirmation if it makes you feel better. Hell, if it is perfect, wait for confirmation if it makes you feel better. But you'll get to the point, and you're kind of caught in limbo, right? It didn't quite make it, and it blew through that one with the reversal bar, and you're like, shoot, where do I go? Confirmation's not a bad idea. It works. You are getting in way late, and I'm just assuming the market is flying at that point. But nicely done, Jen. What a great way to finish off the week. What a great way. Wow. Pow, pow. Good stuff. Enjoy your weekend. Tell your dogs I said hello. Tell your husband to stop building spreadsheets for things that don't need spreadsheets. And I will see you Monday morning bright and early. Enjoy your weekend, Jen. And guys, on that note, S&P, weak triggers, almost made the fib, going the other direction, nothing to do. I had a gold chart on accident. I just left it open. Gold doesn't have momentum. You can see that fight between buyers and sellers. Rules keep you out. Crude oil directly into a termination condition. No matter how much you hope or wish or want that thing to go up, the rules say no. But if you took the median probability from back here, you probably don't care. So I'm going to go stretch my legs, guys. I will be back in about 4 or 5 minutes. When I come back, we're going to go through the rest of the charts. And Wayne, I am going to go through every one that you posted about those strong tops and bottoms, because I think there's a huge valuable lesson for the entire classroom there. So guys, go stretch your legs, refill your water. I'll be back in just a minute. It's Friday. Termination conditions for the win. You guys see it? Price reached a divergence high. Triggers didn't break. Big untradeable bounce. Avoidable loss. I like that phrase, avoidable loss. Well, no, I don't have to trade into a termination condition. I don't have to trade without momentum. I don't have to trade from an area beyond the trigger lines because my advantage is gone. All right, 1, 2, 3, 4, 5, 6. All right, so these are the questions, and then the next one is the trade. And then Trina, I'm going to throw yours in there as well. So guys, I want you to see something. Wayne's at the point of his career where he's looking for more advantages. He's looking for more opportunities. I want you to see something. Price reached resistance with weak triggers, and resistance stopped the market. All right, let's look at the next one. Price reached resistance, triggers didn't break, even with strong triggers. Resistance stopped the market. Smalls broke through, large didn't, market reversed. Smalls broke through, large didn't, market reversed. Smalls broke through, large couldn't quite make it, market reversed. Smalls broke through, large didn't, market reversed. Pretty cool, right? So if you had to say, what is the best takeaway from these 5 pictures? Notice that there were strong triggers, there were weak triggers, there were retests. But the one thing that held true is that until the triggers got to the other side, that area has the potential to reverse. And guys, that's the lesson that I want to get you on that one. It doesn't matter if the triggers go into the area strong. It doesn't matter if the triggers go into the area weak. It doesn't matter if the triggers don't match. It doesn't matter. It just doesn't matter. Once you learn to respect termination conditions, guys, it pulls a lot of losers out of the mix. All right, let's check this one out. Did I miss? Did we double print on Trina's trade? Hold on. I think we may have. Man, there's a lot of conversations in this room this morning. There is one, and there is the next. So let me make sure I didn't mess anything up. Here we go. All right, Chili Dog using small chart entry. So smalls are outside of the large. I got it. I think I accidentally clicked on hers twice. So not odds favorable momentum. But everything says down, one line's out, the momentum is there, and the midband is not behaving as a termination condition. So while the momentum isn't great, the path is in fact clear. But you've got odds favorable momentum on the other 2 charts. And Wayne, this is a lot like what Jen did. Maybe the large chart isn't 100%, but with momentum over here, you're pretty good. The only thing that I would say, Wayne, is that you didn't let price clear the bouncy stuff. I know you did the math. I think the math is a tick off. That would have been your entry bar. And it's only 2 ticks. See how it's still sitting there? I like a clear break. You may have different rules. Either way, beautiful quick profits. You know me and math. Beautiful quick profits and exiting the trade. And guys, this is the brilliance of this trade. When you say the reason I'm taking it is because of momentum, if you have spent any time at all, if you have put any effort into looking at a small chart, you know that momentum can be fleeting. You know that momentum goes away. You know that momentum rarely lasts for giant moves on a large chart. That's how we get the trend trade. So if you're taking a trade and the only thing going for you is momentum, it is absolutely brilliant to take quick profits, get out, wait for your next opportunity. And Wayne, you did it wonderfully there. I love it. Love everything about the way you took that. And then Miss Trina, who's a solid week into it with us, already knows the difference between strong and weak tops. She says, all the triggers broke through. This is a weak top. She says, but this is definitely odds favorable momentum because there's separation. Good morning, Miss Cindy. Nice to see you. And she says, it's a clear path because all my triggers got below the 1-to-1s, and the mid-band's only a termination if the large triggers are a full bar away. So Trina, you had odds favorable momentum and a clear path. What a wonderful recipe. Then you waited for the reversal bar, and at the time of the reversal bar, you identified where the market may retrace. You found the lowest area of resistance, you activated a limit order, and they ran your ass over. Trina, are you listening? So here's the question. If this trade set up again, exactly like it looks in this picture, would you take it, even though this one lost? Because it's a pattern that wins more than it loses. And Trina, that's it. You took the perfect loser. You took the ideal loser. You took the best loser you could ever take. Fit every rule, and you did such a great job of writing out why, and why you put your stop where it did, and why you put your entry there. You have the recipe. You have the recipe for the absolute, positively perfect trend trade, and it is such a beautiful execution that I'm going to steal it. And you can't stop me because you're somewhere in Alabama and I'm in Texas. So Trina's perfect high probability trend trade didn't work out this time. Boom. There you go. You're in the Hall of Fame, Trina. And now for some unsolicited my 2 cents. My 2 cents. Gold is a freaking psycho. Gold is like the unstable little sister of the NASDAQ, and gold tends to overrun a lot. I refuse to trade gold. The chili dog trades in golds don't work. I've had people study it and say that you have to hold bigger stops because it tends to be a little more erratic. There's a reason that I teach on crude and the ES, because they flow the best for new users. And there's people that trade gold with success, and there's more people that come to me and say, Mark, why the F am I trading gold? They keep running me over. They keep hitting my stops that go in the right direction. They keep overrunning stuff and then doing everything that they said. I'm not going to tell you where to be, but I'm going to say that I teach on the ES and crude for a reason, because it provides the most stable atmosphere for new users. Dog don't bark on gold or NASDAQ, and it's true. And when you trade a market that's a little more erratic, you'll find that there's a lot more overrun. You'll find that they push a little bit further beyond, even if it's really pretty. And it's the weirdest thing, and I don't know why it is, Trina. I don't know why there's so much emotion in gold, but there tends to be. And when you get to the point to where you learn the patterns a little bit on it, when you begin to recognize it, you'll find a way around it. There's a guy, he's not in here this morning. He trades gold a lot. I mean, Wayne trades gold a lot, but Wayne's kind of figured out the nuances of it. So until you begin to develop nuance and recognize the characteristics of a particular market that can be a little erratic, sometimes it's easier to train in a different arena. But great trade. And I know that was unsolicited, and guys, you're never obligated to listen to me. I don't give trading advice. But if I've been there, done that, I tend to share my story. All right. Pete, I love it when you guys give me like 5 or 6 pictures. I think it's awesome. Because it means that even though you're in a position where you're comfortable, even though you're in a position where you know your plan, you're still saying, let me make sure I didn't miss something. Let me make sure that my read was right. Let me make sure that I didn't skip out on something. Absolutely, Trina. Feedback's what we do here, right? How do we get better? Somebody that can read indicators just a little better than you offers their 2 cents. The same reason when you guys put some really cool stuff in the room that I've never seen, I steal it. Wayne's entries are a good example of that. I love Wayne's entries when he gets into trend trades. I may have liberated that, so good stuff. All right. Pete uses a different platform for one of his different accounts. But Pete pretty much uses and I can't see what you did over here. You got in at 05, which is somewhere back here. I don't know. The charts don't make sense over here compared to this. Pete got in at 05 and out at 77. No idea why, but he's absolutely killing it. 8 grand doesn't suck. Momentum, potential to break. Little Nexgen momentum trade. Quick profits, out with a loss of momentum. Pete, perfect execution. The area is not quite broken, and Pete says, I will just snap in, take quick profits, get the hell out. Really well done. Here's the Pete we know and love. So strong top. Strong top. Guys, I'm telling you, when you go back and study strong tops and bottoms for a while, it creates a little confidence going the other way. Triggers rolled, separated. It's a 50-50 trade. And then Wayne, if you got your ears on, this is one of the reasons why I believe letting the back of the bar clear the area is so vital if you're trying to run a little momentum. Because as long as price is on top of something that can create a bounce, it can create a bounce. So you got in and out, but if you had just waited over here, you've got the exact same entry. Easy money on the momentum. Should have added on here on the trend trade, but didn't. But you carried it all the way down to the fib. Nicely done. And guys, you'll find your way. And just because I say, hey, this might be an easier way, doesn't mean that you have to do it. There's the same trade. Gap theory brewing. We'll start looking for entries soon. Waiting for that pullback. Oh, okay. No worries, Wayne. Guys, I'm never calling you out. I talk about what I see. So if I say your name, it's because I'm associating it with the picture. I like it. And again, I don't know what any of this stuff means, Pete, but I'm glad that it works for you. I'm going to stick to the Nexgen charts because that's what I'm good at. Just an observation on the large chart in crude oil. The mid-band is very powerful. As you can see, tests and retests, tests and retreats, but eventually it breaks and repeats the same pattern to the upside. So you're actually missing a really cool piece of the puzzle. From a weak top, do you notice that the mid-band holds on its own? Weak bottom, mid-band, weak bottom, mid-band. Now it's a termination, but it's also a fib-based termination. And then it's a termination with fibs, pivot stop out. That's where it heads up. Weak top, mid-band holds on its own. Strong top, mid-band needs that Fibonacci area, those yellow 1-to-1s. And then it goes up, hits, mid-band holds at fibs, off of a term. Mid-band holds at fibs, off of a term. And then it comes up, resistance becomes support. Resistance becomes support. Now from a strong top, that mid-band needs the support of a fib. And now that it's a weak top, the mid-band is more likely to hold on its own. Does that make sense? Does that make sense, Pete? Looking at where it's coming from has a lot to do. Has a lot to do with it. Let me know what your study comes up. Does that help a little bit? Guys, my brain sees patterns. It's why I'm teaching this classroom. But I think that's the one. You notice from strong tops, it has the support of Fibonacci. From a weak bottom, it can kind of grab it on its own. I love stuff like that. And guys, when you tell me you're working on a pattern, I get excited about it because I go back and start trying to find that pattern too. Because I like helping you, but I also like learning. Learning is fun for me. It really is. All right, who's next? Joel. And guys, if I ever miss a picture, make sure you let me know. Sometimes I miss pictures. I never mean to, but sometimes I miss pictures. Joel, odds favorable, clear path. I like your entry. Stop where the market shouldn't go, saved your bacon, and easy money. And Joel, the only thing I can say about this, the only thing that I can say about this particular trade is you knew exactly where the market was likely to go. And look at how far away your triggers are from that fib. Do you need to give back $100 with this look? And this is one of the great things, guys. So think about the idea of what it takes to break a termination condition. If you reach an area and the triggers are this far away, what's the likelihood of that area breaking? When price retraced and hit this fib and all your triggers were 4 or 5 points away, what's the likelihood of that area breaking? Well, it still can. I love using this and using these areas. Joel, you're a rock star trader, brother. Get paid, right? It's a beautiful trade, beautiful management, awesome profit taking. Get paid at the line and just catch the next one if you feel like that's your best option. Because you're going to get the next one, guys. The next trade is always coming. Futures traders have this weird idea that they have to make all the money on the first trade. They have to make all the money in the first hour. They have to make all the money by 8 a.m. or they're never going to make any money. And it's just not true. Pop it in, Junior. You don't even have to say question. Just type it in. I'll take a look. All right. Saw the red and green might have been a 50-50. That blue fib might have been the culprit for the loss. Looked like a clear up path here. Saw a mid-band inside of a trigger. Set limit even though I see a divergence. All right. Who is this? Thank you for talking through what you see. That's what I thought, Jeffrey. This looks like a Jeffrey picture. Jeffrey, can we go to Sunday school where all answers lead back to Jesus, right? You know what I'm going to say. Jeffrey, what is color defined? Just trend, right? That's it? That's the first thing. So trend is up. You're absolutely right. So once we establish trend, and Junior, I'm going to answer your question after we go through this chart, okay? I'm not ducking you here. So, Jeffrey Dean, do you have momentum? Do you have strong triggers on that large chart? We're just going to run through it. Okay. So, do you have a clear path? Hold on. Up. Do you have a clear path up? Every trigger line is below the fib. No. So, if I don't have momentum, if I don't have a clear path, why look for an entry? If the people that control the market are telling me that I don't have any advantages to go that direction, the small chart, Jeffrey, doesn't even need to come into play. Does that make sense? And this is your look, dude. Because you've shown me a lot of pictures with these. And you're so excited about the, oh my gosh, it's been going down. I'm going to look kick-ass in front of that girl up the street if I'm the first guy in the long trade and it works. Right? That's all it is. Nothing says up. Dude, I get it. I've been there. But Jeffrey, do you know what I would have loved to have seen? I would have loved to have seen you taking a loser right here with momentum, with direction, with the potential to break from the areas inside of triggers. And it didn't work because it was a 50-50 with divergence. But man, I'd rather see you trading with all of the advantages on the large chart and getting beat instead of fighting everything and hoping. Does that make sense? You can give yourself a really big edge by following the large chart. But the small chart, it is the siren song, Jeffrey. It is that beautiful mermaid 300 yards out, and you are steering your boat to the rocks because she says you're going to win. Moby Dick over here says you're about to get beat. So, large chart leads the way. It eliminates so many problems. Large chart leads the way. It keeps you out of so many opinions. Don't fight the large chart. Go with the flow. Great stuff, man. Thank you for posting that. And Wayne, most people do. And awesome. So, Jeffrey, your job is to annotate it. Don't fight the large chart. And go back and look at it Monday morning, reminding you that that's not your path to success. All right, Junior, are you with me? We're gonna back up to Joel's real quick. Cool. So everything starts on the large chart once again. Smalls are below the large are wide, the space is there. This is momentum. That's that odds favorable momentum. And then price didn't reach Fibonacci support, and all my triggers are below the previous support. That's the clear oath, which is really a clear path. But I like the clear oath too, Joel. I solemnly swear to not have anything in the way. I'm going to start using that. So, Junior, what happens is everything on the large chart says down. Everything on the large chart says super strong momentum. Everything on the large chart says that there's absolutely nothing in the way to create a bounce. Does that make sense? And this divergence line wasn't even there. This doesn't even happen till way up here. So what Joel did in his infinite wisdom is Joel said, you know what? The large chart's awesome. The large chart says look for a trade. The large chart lets me know that the odds are favorable for everything to continue down to that fib. I'm going to wait for this magical reversal bar that says, hey, you know what? The fight is on. The retracement is here. And Joel knows that this retracement could go somewhere from that reversal bar to the very top of those triggers. And it's not a mistake that that's exactly what happened. And Joel also said, because Joel's freaking smart, Joel said these areas, fibs, mid-bands, yellow 1-to-1s, fibs, mid-bands, yellow 1-to-1s, inside of that retracement zone are most likely to create the bounce. And Joel said, my rules say get in just below the mid-band so I don't trip over something and miss the money. But Joel's rules also say, I know that the retracement could go to the top of those triggers. I'm going to put a stop where the market shouldn't go. So Junior, that's how he defined his entry. He said, once the reversal bar prints, I know where those price bars might go, but I know where they're most likely to bounce. I'll enter at the bounce point inside of the retracement zone, and my stop outside of the triggers, if this is going to be a winner, is going to keep me safe. And sure enough, as it heads down, he takes, that's $100 predetermined. And then because of this strength and momentum, he rides that wave down to the fib. Does that make sense, Junior? This is that high probability trend trade. And Joel nailed it. 100%. Awesome. How do you like that, Joel? We're using your charts to teach class. I love that. You guys are so freaking amazing. All right, who's next? Better Dad, are you back? Because I think I have one of yours. Better Dad is not back. That's okay. Guys, if you ever leave the room, just let me know. We'll come back to your charts. So when Better Dad comes back, we'll get to his chart, and we'll just keep moving forward so he doesn't miss out on feedback. We saw Jen's. Uh-oh, we got Josh's. Odds favorable? Yes. Clear path? Yes. Pull back to the mid band just outside of the area. You took it pretty far below. Quick profits. And then profits. Josh, good job. You were in at 27 and a quarter, it looks like. 25 and a quarter was your profit target at $100, but you started getting nervous and got out a tick early. And then 23.50 should have been your 200, and you said, I want the damn fib, and you didn't give much back. $8 and 16. So from 27 and a quarter, 25 and a quarter is your first target. That's 8 ticks. It got bumped up one somehow. 16 ticks would be 23 and a quarter. You got out at 23 on the way up, not on the way down. Does that make sense, Josh? You know I see everything. Did you adjust them, or are they just being wonky on the fills? Yeah, check your ATM too. That might. Okay. Then great job. That's what I was hoping. I was hoping that you didn't move anything because you've been super consistent. It may have just moved so fast too. Because look at your timestamp, 12, 12, 12. It may have just moved so fast that it was a little wonky. It's a great trade though, Josh. Nicely done. It's really cool watching that consistency start to roll in with you. You are killing it. Bob, be the man. Strong top. Odds favorable. Odds favorable down here at the entry though, right? Just making sure. Potential to break. Pulls back to resistance inside of triggers. Stop keeps you safe. Money, money. Great trade, Bob, be the man. So there it is again. Large chart says go. Small chart defines entry, where the market is most likely to continue. Where the market shouldn't go, stops keep you right in the game. And you're getting paid. Bob, beautiful trading. Beautiful trading, Bob. You guys are catching a lot of winners with this trade that only has 3 rules. Not sure how I feel about that. All right, Wayne, we got a couple. So Wayne, did we already get that one? Weak bottom, weak triggers, doesn't matter. Market reversed. Weak bottom, weak triggers, doesn't matter. Market reversed. And then Wayne, I think that we can go one step further. And this is from Pete's picture that Pete shared. When you have that weak bottom, the mid-band tends to be a little bouncier. I know you already don't like the mid-band, but when you've got that weak bottom, it's more apt to hold on its own without the support of Fibonacci. I think that was kind of the pattern that we got to pop in here today. Hey, Junior, have a great weekend, man. Yes, Gary, everybody's having trouble with NT8 today. It has been pretty common in the room. I don't know what's going on with it, and I don't know the fix, but I think you're the fourth person that's mentioned it. Do they have anything on their website? So Wayne, I think collectively we came up with a little bit of a pattern to be able to use those weak tops, weak bottoms, and create maybe some expectations when we get to mid bands. That's kind of cool. I like it when class does that. And then again, Pete, I love that you share this stuff, but I've got to bypass them because I don't understand it, and I can't even begin to speak intelligently. So guys, I love when you use all the different stuff, when you use the different indicators with Nexgen to find your success. I think it's rad. But if I can't read it, I can't speak to it. And if I can't speak to it, I don't want to say something wrong. I don't want to tell somebody this is what it's doing, this is what it says, because I just don't have any idea. And then we saw this one. Bob B, you get to keep the man moniker for another week after that trade. And then here we go. There's the chili dog. Odds favorable. Let the back of the bar clear all the bouncy stuff. Ride that wave of momentum down to support. Nobody does it better than Ron. Great job. Great job. And then Josh again. When you follow your rules, it becomes effortless. Big. Pete, I look at them in my own free time, but I can't speak to them in the room. And I don't want to confuse people with a bunch of other stuff when I tell them it can be done with 2 charts. It can be done with more charts too. It definitely can. And Pete, I got nothing but respect for you and your plan. Josh, big virtual, non-threatening, platonic, no need to call HR hug coming your way. When you follow your rules, it becomes effortless. Clear path? Yep. Odds favorable? Oh yeah. Follow rules and make money? Duh. I love it. Trust Nexgen? Duh. 4 contracts, $2,600 for the day on 20 accounts. I think I'm done. No emotions. Josh, great job. That's a trend trade. But yeah, the chili dog is awesome. But that's a trend trade. That's everything up. Pull back to support inside of triggers. Get paid. Josh, you have 180'd. I'm telling you, dude. You have 180'd. Something clicked. And just, man, I love it. Thanks for not being a not being a dumbass. It's harder than most people think, Josh. And you know, human nature, people don't celebrate their own victories. So guys, I want to make sure that I celebrate your victories. I want to be able to take the time and tell you when I see that change in you. I want to be able to take the time and tell you when I recognize that you're not making the same mistakes, that you're moving outside of it, that you're growing as a trader, that you're maturing. Because we don't celebrate the victories. And Josh, your victory is 1, waiting for the right entry, but 2, making money on your amazing entries. And just great job, dude. All right. Odds favorable momentum, 50-50 on the divergence high. Divergence kills 50-50 entry. I like it. So, well, it never reached the 1-to-1s. Oh, but that killed the chili dog entry. And guys, divergence on a 50-50 is one of the biggest reasons 50-50s fail. Wayne, one of the most common growth points outside of the KISS plan is if you're coming from a strong top or bottom, a lot of us will take 1 shot with divergence and manage assertively, and then let a second divergence be the deal breaker. Just a little insight. And then I think Morgan did that. I see Morgan typing, and Morgan found that he still lost more than he won against divergence. So it's up to you. But a lot of people will risk 1 if everything is perfect. You'll have to find your own version. And then we saw that one. And then I like this. So you chili dogged, and because the momentum never wavered, you actually dissected the fib and took bigger profits. That's pretty awesome. Letting momentum lead the way, and it never closed on the wrong side, and you were able to capitalize even more. That's a great trade, Wayne. That's a great chart read. Nicely done. Oh, that's the same one. And then chili dog fail. Does it show the failure? No. CD fail. Oh, at the bottom. So you don't have odds favorable. You don't have odds favorable. So Wayne, that's that one. You gave up momentum on both, right? You gave up momentum on both. So it's hard to take a momentum trade without momentum. You didn't even have it over here either. So I don't... Yeah, inside, inside, inside. It's hard to push a market without that momentum. And Wayne, if your thought process is anything like mine is, and I think that it is in a lot of cases, is when the market is doing this, when the market is screaming in break areas and screaming in break areas and screaming in break areas, your brain says, well, hell, it can't stop now. It's already done all that work, right? But check it out. It started way up here. They're exhausted down here, and your trigger lines are showing that exhaustion, and your trigger lines are showing that exhaustion, and your trigger lines are showing that exhaustion. So I've gotten to the point, and this may or may not be helpful, if I'm in a giant move like this, I like to just say, I know they're tired. They've been running. And my trigger lines are telling the story. So I understand why. Maybe that'll be a little helpful. And then my brother just absolutely ripped my ass 1,000 times. Mark, how can you have a momentum trade without momentum? And of course I would say, shut up, John. And there's the one where they're outside, right? And it's easier. And then when they're not outside, you start taking chances. I see you doing the math on it, but it's already losing steam on the way down. And then this one, everything says up. You tried your heartburn counter trend and it whipped your butt. And then you said, well, let me turn that around. And you catch it. And then the one thing again is right into the one-to-ones. Didn't clear the divergence high. So a little stretch of the rules there. But with this look on the large chart, it helped. Yeah, no worries. That is a different time. When the large chart leads the way like this and it's screaming, you take a chance every now and then, and you did a good job with it. So great stuff, Wayne. Great pictures. All right, Better Dad, I'm going to go get your pictures. And Better Dad, since I'm backtracking a lot, let me know if I miss one. Let me see where I am in the general lineup. Wayne. We saw Ron's, Better Dad, Josh's, Jen's, Wayne. All right. All right, Better Dad. Let's go through it. And then we got one of Ron's chili dogs after this. I think we had 3. So let's talk. So Better Dad, the recipe for a termination conditions. Price reaches an area, right? I'm wondering why you don't have any areas on your charts. Oh, there's one. I see one fib. Maybe it's just out of range. So a divergence line reaches. Price reaches an area. The loss of momentum creates this divergence line, and it doesn't happen until about right here where my cursor is, Better Dad. So what happens is the only way this divergence line can ever be a termination condition is if price comes back up to it. And I don't have an example here. The same is true here. That's just a loss of momentum. The only way it can ever be a termination condition is if price reaches it and the triggers stay above. Does that make sense? But what you did have is weak triggers in the middle of nowhere. You've got odds favorable momentum. Absolutely. And let's read your question. In the retracement, the triggers and synthetics are really far apart, but there's a fib and a midband in the trading window. In the large chart, if the large chart triggers rolled and odds favorable clear path to be good, it felt wrong, so I did know and let the market teach me its character. Can you comment on how I might have read this chart? All right, you ready? You ready to do the read? Right now, there's about 10 users that know exactly what I'm going to say, Better Dad, and you'll be one of them soon. It's okay. There's your reversal bar. At the time of the reversal bar, from the bottom of the triggers to the top of the triggers, this is where the market may retrace, right, Better Dad? You know that lesson. And your stop goes 4 to 5 ticks up here. So from, we're just going to call it 19 to 22. With a potential retracement zone this big, are you willing to just jump in at a midband? Feels like a lot of risk, doesn't it? No, I wouldn't either. Especially because it's getting close to that midband and these are far away. So Better Dad, there's a couple of different things you can do. One thing you can do is you can say if it hits that midband and gives me a reversal bar, I'll take a trade because at least then I can put my stop above the reversal bar. But it doesn't mean that you're going to get a winner because it can still crank all the way up and close that gap. Does that make sense? This is where the very basic rules, I think, help a lot. If you look at this and you say price could retrace all the way up here, do I really want to be in a short position down here? And it's one of those not my money scenarios, Better Dad. Or it's one of those I'm cool with the risk. Or it's one of those I'll wait for a confirmation bar. You'll figure out what suits your brain the best. But for me, from a bad top with that huge gap almost to the midband, you couldn't pay me to enter this trade. Awesome. I like it when you guys ask my thoughts. And there it is again. See how it closes the gap to the large triggers? So here you decided to take it. And it did exactly that. It closed the gap. You had momentum. But that mid-band pulled all the way back to the large triggers. Do you see how this is the exact opposite of the last one? Just go in the other direction. Here you chose to take it. At 21.5, 21.3, it retraced all the way back to 2300. You had about $120 worth of risk. You defined it with the triggers. It went right to the triggers. You were okay with it. You took it. And you took your first target. And I don't know why you have a $50 target. And then you held it. And then it looks like you got out about break even. So no worries. But do you see how this is exactly what you were up against? This one was about 120. You were cool with it. The previous one was freaking ginormous and you weren't. So you'll start making decisions because you always know where risk goes. Great job. And then I think we have this one too. Thought you were getting it. Look good. Odds favorable. Clear path. Fib in the trading window. Where's your fib in the trading window? Oh, up here. For the momentum style, huh? Entered there thinking you could catch it on the upswing. Turned against me. So you're missing fibs trading, or better, Dad. You're missing fibs because this fib at 29.6 should have printed on your large chart. So one of the things that your large chart's going to have, and maybe this is part of the Ninja Trader funky stuff that's going on today. I would hit F5. I'd click on the chart and go F5 and rerun the data. But on your large chart, you should see fibs from the 5-1, the 13, and a 21. And if they're not showing up on there, something is afoot. Something is wrong because each of these is super important. And if they're missing, it changes the whole dynamic. In this fib, you probably would have had a termination condition right there. You probably would have never wanted to take this trade. Does that make sense? And then I want to give just a little something on that window. Cool. So what are the areas inside of triggers? Likely to create a bounce, right? Does that make sense, everybody? Why do we trade from areas inside of triggers? Because they're likely to create a bounce. So better, Dad? If you get a reversal bar, exactly, fibs, midbands, and yellow 1-to-1s. If you get a reversal bar beyond the area, is this area really likely to create a bounce anymore? If your reversal bar closes below the area you're hoping to create a bounce, it didn't create a bounce. Does that make sense? Cool. So once that happens, I've got to look to the next areas. And notice how they're on the wrong side of the triggers? Language for the win. It's okay. But even without that fib, even if it did have a fib and you chose to take it, better, Dad, the lesson that I want you to get is that if your reversal bar dissects the area you're hoping creates a bounce, it's not creating a bounce. It just got blown through. And then your only other options are on the wrong side of everything, which lets you know this is not likely to create a bounce, and these are on the wrong side of the triggers, and maybe you can avoid that loser. Does that make sense? These are the things that right now you're like, holy crap, that's a lot to think about. But if we keep talking them out and we keep working through them and we keep pointing them out and we keep using language, you'll find that it gets easier and easier. Awesome. Keep these posts coming. And yeah, Marlon, it does. It becomes second nature. Eventually. All right, let me see where we're at real quick. A lot of pictures. Who's this guy? Odds favorable momentum, nothing in the way, jump in, get paid, jump out. Ron, beautiful. And I think Morgan said it. You're having an outstanding week. An outstanding week. And guys, can I point something out? I know a lot of you people are watching everybody's trades and you're saying to yourself, I want to do that. I want to do that. I want to take that trade. I need this trade. I need that trade. I need those trades. Has anybody other than me noticed that the most successful people in this room do the same damn trade with the same management over and over and over and over? Because they know that it wins more than it loses. Because they've proven that it wins more than it loses. And the entry and the exit are the same freaking thing, 99% of them. There's some logic, there's some giveaways, some keys, some golden geese there, guys. All right, triggers down, cleared the fib. Jump in as the triggers start clearing the fib. Chili dog didn't work. That's it. Chili dog didn't work. Actually, it did. Cleared it here. Sorry, I missed it. At 71.50. So Cav, was this Cav? Who was this? I'm sorry. I lost my place. There's a lot of pictures. We're staying late today, guys. This was Cav. Okay. Price didn't clear the area here, but you pulled one off, and then it turns into the trend trade, and you try to get in on the double momentum. Didn't work, but you know that if this fails, it's most likely to be a trend trade, and you carry it down to the fib. So I like it. Nicely done, Cav. And then Pete. Trading into termination conditions. Odds favorable. Nothing to stop that trade. Resistance says don't do it. Pete says I'm doing it anyway. Gets in low. And then it does hold. And you get to pay commissions. Great job. Guys, this is just working harder than you need to. Pete has a plan. I don't question Pete's plan. Pete's plan says that when he's got a strong bottom and everything's going up, maybe he'll take a shot with momentum. But more often than not, it's not going to work. But notice what he wrote here. Half off at 10 ticks. Half off right at the thing that could stop the market cold, and absolutely nothing to lose if it comes back. So if you're going to go outside of the good stuff, be willing to manage assertively. That's what Pete did, and he did it beautifully. Cav, termination, everything rolls. This is nice. You let it close the gap to the large triggers, and you just go long with it. Termination, everything rolls, odds favorable, price returns to the large triggers, Cav lets it, and he chooses to trade right into the termination condition. You guys want to see the little bar fight thing? Strong top or strong bottom, odds favorable, termination. With odds favorable momentum up from a strong bottom, Cav says it's more likely to bounce up off the triggers than it is to head back down because of the strong bottom. And he takes a shot. And that's it. He breaks rule number 2 for the high probability trend trade because he weighs out the advantages. And because he understands patterns, he weighs them out from the lowest risk spot ever. Nice job, Cav. And then this goes back to that one Wayne and Pete, right? When it's coming from a strong bottom, it needs the help of Fibonacci very often. Or it takes Fibonacci instead of just a mid-band floating. So there's that pattern. Good stuff, Cav. Man, I love it. You guys are keeping me busy today. Let's do this every day. Ron says profit can be boring. Never. Price clears, everything says down, jump in, jump out, get paid. Ron doesn't need feedback. He does the same thing every day. All day. Screaming market. So Andy jumps in. It was too fast to get in at the right. He says, but it's still the trade. Jumps in, makes money because it's only momentum. Jumps in, makes money because it's only momentum. Lets it get to the other side. Jumps in, makes money because it's only momentum. Andy, nicely done, man. And then right when I brag about Ron, he pulls one of these. They have been lively, haven't they? All right. Ron says, I'm going counter trend and you can't stop me. That's what the new user sees. I'm going counter trend and there's nobody that can tell me that I can't. The trend is down and the smalls are still outside of the large. Hey, Josh, have a great weekend. Awesome week, dude. Awesome week. But let's put the big picture in perspective. That's a termination condition without odds favorable momentum. That's 3 divergences in the same price range. It's the double whammy, could stop the market. And Ron says, well, hell, I'll see if they want to retrace a little bit. And he takes quick profits. And he says, I'm going to get out before they even make an up bar. Fights everything. Wins more often than it loses because Ron's done the study on that particular pattern. Just because it fights everything doesn't mean it's the wrong trade. It just means it's the right trade for Ron. Market moving, odds favorable, weak bottom, no divergence, perfect entry, easy money Morgan, high five. That's the one, right? If you're going to take a 50-50, you're not going to have divergence. Beautiful entry, perfect stop, reduce the risk, get paid. Get paid. Morgan, solid. Great trade. Beautiful trade. Momentum and potential. Momentum and potential. Momentum and potential. That's it. And think about it, Morgan. This week bottom, you're 2 ticks above support, right? 2 ticks. You are 2 ticks above a line that was built through tens of thousands of calculations. And it had weak triggers. And Morgan, let's look at it. A strong bottom might have you taking a chance here, right? That probably helped this 50-50. Dude, you're far away. At this point, that's your golden ticket. And man, you did it beautifully. What a great job. What a great job. All right, Jerry, 1967. Strong triggers, big and small chart. Clear path, I agree. Plan was to watch hit 1-to-1s, then flashed back to trigger, came through 1-to-1, slower, move target down. Awesome. So, Jerry, 1967. Are you in here? Cool. Oh, Ron, have fun on the to-do list, man. So Jerry, in one word, tell me why you entered. Could you do that for me? In one word, why did you enter? Momentum, right? Cool, I love it. Momentum and path, momentum and path, momentum and path. All day long. What was the problem with the small chart? You didn't have path, right? See those yellow 1-to-1s? These will screw up your good time. If you had gotten in somewhere down here, you had room to your target. So the only challenge that I can find with this chart, Jerry, is that you didn't give yourself room to the target. You didn't give yourself the opportunity to have enough room to get paid. And sure enough, those 1-to-1s created a bounce. You got to the chart late. Jerry, have you ever showed up to the movie theater an hour and a half late and decided to pay for the ticket anyway? Because damn it, you were going to see that one? You were going to see that movie, Hell or High Water? No, of course not. Why? It's not your movie time anymore. If you show up late and your rules aren't met, you got to squash that fear of missing out. I love your read, but your entry was down here at 05, which gave you room to make $100 on the trade. And if all I'm relying on is momentum, I like at least $100 worth of profit. It's a great look though, Jerry. It's a great look, and you really adapted to that one fast. And it's just going to keep getting better, man. It's just going to keep getting better. All right, Miss Trina. Odds favorable momentum because trigger's wide. Clear path because no term. Are you with me, Miss Trina? Cool. So, see how the large triggers were a full bar away? That's your only challenge on this trade. And they close back to the large triggers. You take the trade, and your stop's in the right spot. Brilliant. and you come up and you get paid and you get out break even. So there's one thing that I want to talk about. The mid band from a weak bottom tends to be bouncy. And what happens is once you hit it, even if price extends, when these large triggers drag, it's probably going to close the gap. You knew that. Your stop is perfect. But anytime you have a weak bottom, Trina, or a weak top, I want you to keep your guard up on that mid band, because what happens from a weak top or bottom, more often than not, my Ninja Trader crashed. Pete, did you see Pete's picture earlier where he was talking about mid bands holding and mid bands not holding? And mid bands are more likely to hold from a weak bottom. So just get your management hat on. And you did it beautifully. You got out at the trouble spot and you didn't give anything back. And the execution on this it's beautiful, Trina. Great job. You are right where you need to be. My classroom. This is where all the cool kids are at. Weak bottom, just watch the mid band. That's it. How easy is that? All right, Miss Cindy. Missed you in here. Not really a termination. Odds favorable, potential to break, smashed through, pulls back, doesn't quite get the mid band. It was so close. You get in around 65. And with all that momentum, you take it right to the next fib. Absolutely beautiful, Cindy. Haven't seen you in here in a while. I love that you're coming back with this one. You're like, Mark, I haven't forgotten you or what I'm doing. Really nice execution. Did I miss it, or have you not posted it? If I did miss it, will you repost it? Okay, you have. Whew, okay. Odds favorable, clear path, pull back to support inside of triggers. Place stop at bottom of first green bar. Took it to the fib. Hey Trina, have a great weekend. Appreciate you being here. Wayne, good job. I know you're mentoring. Got a tuna Shelby. Oh, you poor thing. Have a blast with that. I love horsepower. Enjoy your weekend, Wayne. Thanks for all the great lessons this week, man. You really got me thinking this week. It's been fun. Appreciate it. Stay safe. All right. Jerry 1967, are you with me? You said that you got in above the one-to-ones. And I'm curious, so when we talk about the rules, Jerry, are you just waiting for confirmation because it feels better, which is okay? Okay, no worries, you missed it, but yeah, it's already doing everything it's supposed to do. And I love the target. Room to targets, so awesome trade, Jerry. There's really nothing I can say about it other than great job. That's a high probability trend trade that did everything we'd expect it to, which means that I need other people to look at this trade so that they can recognize this pattern. So you're going in the Hall of Fame. I mean, that did everything. Everything that we wanted it to do. Great job. And now if you guys will excuse me, I got to beat the hell out of Mike real quick. New guy. Welcome to the room, Mike. First post. I love it. All right, Mike. I am going to be as gentle as I know how. Are you with me in here? So the first thing Your charts are weird. Mike, there's no reason to have synthetic triggers on the large chart. So let me show you what probably happened. Oh, my stupid NinjaTrader crashed. Let me pull it back up real quick. And I'm going to show you what probably happened and how to fix it. Almost there. So the only time a 13.2 should ever have synthetics on it is if you are a NASDAQ trader, because your 13.2 will be your entry charts and you need those synthetic triggers for accuracy. So before we ever go to the chart read, Mike, I want you to, do you have your charts in front of you? Are they open? And thanks for posting, dude. I love that you did. So I'm going to right click on your large chart and I want you to go down to templates and go to load. And then Mike, if you intended to have those synthetics on there, that's cool. But it looks like you have the NASDAQ 13.2 and you want the Nexgen 13.2 dynamic Renko. And that's the one that's going to give you the right look. So just a little housekeeping real quick. And then guys, if you will give me 1 minute, I have a poor little puppy dog ringing a bell at the back door to go out. I'll be right back. All right, I'm back and she's saved. So, all right, Mike, you said you put in stop market 6804. So you wanted to go short, is that right? Oh man, Hobbit, congrats. That's twice. That's 2 days in a row you're hitting goals and jumping ship. I love it. You could do it without me. I just make it easier. Have a great weekend. Always love having you here. All right, so Mike, you chose to go short. Is that right? And you went short when your large chart said up. You went short with momentum to the upside, with trend to the upside, with absolutely nothing to the upside. And you said with every indicator of mine up, even with support that just held, I'm going to go short. And then when it did go short and gave you a big win, you can't wait to do this again, right? Because, whoa, that's awesome. So Mike, there's one thing that I really need you to do for me. And it's not for me. I make it sound like it's for me because I like to be needy, but it's for you. If I handed you the microphone right now, Mike, and I said, tell me why. With momentum up, with the trend up, with every indicator up, with support that just held, with the smalls up, the large up, with the synthetics up, what compelled you to go down? And there may have been a great reason. There may have been a great reason. Your mentor told you to go short. Okay. But he's new as well. But he's making money every day, right? More money than he can spend. No, but he's your mentor. Okay. So Mike, can I humbly offer my services as your mentor? Don't cost nothing. Awesome. So I'm going to tell you that what you just did, this is what we describe as the recipe for financial suicide. When you fight trend, when you fight momentum, when you trade into areas The odds of you winning are slim. The odds of you losing are huge. So maybe you're trading somebody's money and you're pissed off at them. But, so when we look at this, this is tough, man. This is a tough look. And watch this. What happens if your mentor gets hit by a bus tomorrow and you don't have a plan, right? So one of the things is get in the habit of writing why on the chart. Let me bring this up. This is my how to annotate charts picture. Man, Alessandro, everything on every chart set up and he went down, right? The small crowd didn't even say down yet. The small crowd even said, I'm not even looking for a fight. So one of the easiest things you guys can do, oh, Cav, just saw that. Have a great weekend, man. One of the easiest things you can do as a new user is trade with the trend, is trade with the momentum. Just don't fight. And maybe you'll find a way to fight. That's cool. But the high probability trend trade is designed to put you in a position to have a trade that wins more than it loses. And I love it when people are brand new because you have to try everything. And Mike, trying everything is awesome. Trying everything is awesome. And the only thing you have to do is drop it in the room and we'll talk about it. And just because you won, and this is one of the most important lessons that you're ever going to get out of my classroom, just because you win doesn't mean that it's going to win all the time. Yeah, but that's what Sim is for, Mike. I'll never beat you up for fighting everything. I'll never tell you you're a dumbass for doing it. I'll tell you, hey, let's talk about why this is probably going to lose more than it wins. And let's work together to create a plan that gets there. And you did exactly what you were supposed to do. You posted in the room. You asked for help. And now we're going to work towards there because you just got to know what you're doing right and wrong. But the impactful phrase here is that if you win and the rules are wrong, it's a short-term victory, but it typically sets you up for long-term failure. And it's true. Simulator millionaires. I was one myself, Mike. When I started with the software, I would make $1,000 a day getting lucky. I would reset my simulator 8 times and pretend like it didn't happen. But I kept getting lucky and I kept having all this money and I was like, I must be the smartest freaking guy ever. Have you met me? And I believed that because why wouldn't I, right? And this is exactly what happens is I lulled myself into this false sense of security with these wins that weren't logical, that weren't pragmatic. They weren't based on patterns. And what happened is the second I went live, I gave up $5,000. It was 21 trades, Mike. In 21 trades over 2 hours, I lost $5,000. And it wasn't prop firm money, Mike. This was, oh shit, I'm never going to be able to buy myself something sparkly because the money's gone money. And I almost quit trading. And this is normal for a lot of people. So one of the things that we'll do is start writing why on the chart, right? And my mentor told me to is the worst answer ever because your mentor is respectfully a freaking Yahoo because he didn't even recognize that your charts aren't correct. And that's okay. I've been the Yahoo mentor. But if you start talking about things every time you take a trade and you break them down into this simple idea that do I have momentum with strong triggers? Do I have it or do I not? Do I have a clear path or do I not? Can I define an entry or can I not? And if you start keeping it really, really basic, you'll be floored at how quickly you get on the right side of things more often than not. So what I just dropped in the room for everybody that's new, and I put this in there earlier, there's a zip file that I just dropped in the chat box called All You Need. And it literally is all you need. Inside of this zip file is a way to get really good at recognizing the basics through chart reading. It is the PowerPoint that I use to teach every morning. It's a high probability trend trade to keep you focused on advantages as a new user. It's a plan that you can follow that's been proven to win more than it loses. It's an idea of what pictures you should be taking and how you should be annotating them. And then it's that very simple trend trade. It's an entire hour's worth of information consolidated into 2 simple pages to make it easier for new users to follow. So rock out with simplicity a little bit, Mike. Keep posting pictures, keep asking questions, and I promise I'll give you everything I have to get you where you want to be. You're welcome. It's great to have you in here posting, man. I know it's terrifying. It's terrifying to post in this room as a new user, because what if I'm wrong? He's probably gonna crucify me in front of all these strangers, and that's exactly what I did, Mike. That was pretty hard, wasn't it? I'm smiling. I hope you're smiling. Strong triggers, nothing in the way. Cindy, your triggers are wonky. Your golf is worse than your trading. Me too. Me too. Depends on the day. Do you see how these small triggers are weird? Refresh your data so you can get the good stuff out of it. You're in crazy low, which is okay because with momentum and clear path, I love your exit. And then second, target protected, too much volatility. It pulled right back to a mid-band inside a trigger, Cindy, with odds favorable momentum and a clear path. It pulled right back to a high probability trend trade entry, and you got out right where your stop should have been, a little lower than your stop. That would be the coaching on this one. Don't put stops where the market may go. Put them where the market should not go. Great trade though, Cindy. Great trade. And then Boaz. Momentum, path. So Boaz, this one's a little different for you. New users, do you remember how we said once you get on the other side of the triggers, you don't know if, when, or where it's going to stop? The language for the entries, guys, is very important. Izzy, are you out of here? Have a good one. The language for the entries is very important because once you get outside of these triggers, I don't know if it's the mid-band. I don't know if it's going to be these 1-to-1s. I don't know if they're going to retest the fib or even the mid-band up here. So Boaz, you are in above the mid-band but below the 1-to-1s. And thank goodness it held for you, right? Because it could have gone up a lot higher. Does that make sense? Man, I've been lifting you up all week, and I got to knock you down a little bit on the last one. So when it's not perfect, it's okay to wait for confirmation. And the difference is, I don't know, maybe a point, maybe 3 or 4 ticks. But at least now it's going in the direction of the trade. At least now you've got a place to put your stop. You're already where the market shouldn't go. How did you decide risk on this one? Is 1 tick above 1-to-1s enough? Does it take 4 ticks? Is it 8 ticks? Right? But large short was perfect. You knew it was a short. I think you can take a little bit of risk out. Even using this one puts you in at 85. Confirmation with a down bar on your market flow is a 2-tick difference. It's a $25 difference, and that $25 gives you some place to put your stop. Does that make sense? Because you have that market flow chart. That's a good use of it when it's not perfect. Just helps define the stop a little bit. Ladies and gentlemen,